dreams. I do this for you. I do this for my mother, who's finally clean, no longer a fan. I do this for you. I do this for my sister, my wife and my kids, cause they part of the team. I do this for all the naysayers and haters who made me one of the greatest. I know it kills you inside, that's why I do this for you. I do this for my father, who I've only seen from time to time in my dreams. I do this for you. I do this for my mother, who's finally clean, no longer a fan. I do this for you. I do this for my sister, my wife and my kids, cause they part of the team. I do this for all the naysayers and haters who made me one of the greatest. I know it kills you inside, that's why I do this for you.
I do this for the kids who sit a bit outside the mix, who maybe cope through humor just to fit in for a bit, who never let the world know when depression's setting in. To all of those who know you, that impression don't exist, and it ain't counterfeit, it's just a way to counter it. I'm living things I dreamed about, I still encounter it. It ain't something that a cigarette or alcohol can fix, but all because of it I flipped it quick, went on to write some hits. This a success off another breath. This the first step in searching to be nothing less than be the best in what you do, to prove their strength in being you. Learn so much in chasing dreams that I never would in school. Depends on where your passion lie, just know passion never lie. Life presents distractions, but your actions have to fortify the things that you believe in. Have to scream it like a battle cry and leave the ones who didn't looking stupid while they're asking why. Couldn't lie, I really do this for the ones I love, those who treat the music as a vice and lyrics like a drug, those who need advice on how to lift their spirit high enough to break out of the box they make of lives they know aren't good enough. Just because it's how it is don't mean it's how it has to be. This is what the uninspired testifiers fail to see. Jealousy results from being that which others fail to be, and if it means you're not with me, that honestly sounds fair to me.
I do this for my father, who I've only seen from time to time in my dreams. I do this for you. I do this for my mother, who's finally clean, no longer a fan. I do this for you. I do this for my sister, my wife and my kids, cause they part of the team. I do this for all the naysayers and haters who made me one of the greatest. I know it kills you inside, that's why I do this for you.
Do this for my mother, she'll be working for the summer. Do this for my father, cause these days I often wonder what my life would have been like if I was not adopted. To grow up in a home where I was treated like a problem, I don't know, it's just a guess. Your guess probably good as mine. Lucky that I grew up in a home that wanted me to shine. Lucky that I grew up around some mountains we were taught to climb. Without that inspiration, I don't think that this would be my life. Do this for my friends who've scattered all across the country now. I'm out in Sweden walking back through life so I can write it down. Make a living off of sound, so crazy to say out loud. I'm the biggest thing since Travis Rice to come up out the town. Sorry, gotta stunt a little. Used to have my dreams belittled, but it's all a part of it. I know people's minds are fickle, lines between reality and dreams I blur like faded nights. Come up been so good for me, I wish that I could make it twice.
I do this for my father, who I've only seen from time to time in my dreams. I do this for you. I do this for my mother, who's finally clean, no longer a fan. I do this for you. I do this for my sister, my wife and my kids, cause they part of the team. I do this for all the naysayers and haters who made me one of the greatest. I know it kills you inside, that's why I do this for you.
Welcome to Marantz Rantz, no advice on finance. Spin the wheel and take a chance. Get an NFT and a little education. The system got undertold, that knowledge is flotation. You wanna learn? Well, you came to the right place. You're pumping AMC, might get slapped in the face. Get your due diligence, know who the villain is. Don't be a sheep when the shepherd's carnivorous. So come learn, laugh, and maybe you win big. And listen up, y'all, the wheel is not rigged. Everybody get a chance in the live chat. Kyoto spin wheel, you win just like that. Retail fight back and this retail winning. Y'all just wait, man, this is just the beginning. All fellow Simeons, GME group singing the truth. We just chillin', infinity infinity pool swimming. So welcome to Marantz Rantz. A lot of knowledge but no advice on finance. Don't even need pants, you can tune in naked like Henny the Mayo Man. Internet's most hated. Don't wanna lose your money, then it's time for you to listen. If you're ignorant, invest in AMC, assume position. The stream about ready, they told us to don't dance. I do what I want. Welcome to Marantz Rantz. 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 Welcome to Marantz. Welcome to Marantz Rantz. Welcome to Marantz Rantz. Welcome to Marantz Rantz.
Good evening, guys. Good evening and welcome back. Welcome back to Marantz Rantz. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. I want to say thank you right now to Abe for gifting the channel and the crew with 5 free memberships for the channel. Appreciate you guys showing all the support to the channel. We're going to go over a couple of videos today, a couple of clips, and of course, whatever's happening with the market itself, a couple of choice individual securities that we pay attention to, the stocks that I buy, the stocks that I'm paying attention to, and yes, my dry powder is loaded. What does that mean? That means I'm going to be buying more than 1 share a day. I'm going to buy 2. Is that fair? I'm going to increase it 2 shares a day. Maybe we'll take a little bit more. Maybe we'll do more than just $15. Maybe we'll do $30. And let that $30 sit right there on your chest as it gets real warm, hot, and smelly, like Adam Aaron does all over, I guess, somebody else. All right, check this out, guys. I'm going to play this clip for you, and I do this just so that you guys don't forget what it was. You guys ready? Let's do it.
Question. How close we were to this system breaking, something failing? How close were we, Thomas?
We were frighteningly close on January 28th when we had 50 million registered shares. At the same time, we had 70 million shares short and 150 million shares short via short call options. So if the call options had been exercised, the shorts would have had to deliver 270 million shares while only 50 million shares existed.
I want you to understand what he just said. He said that they would have had to deliver 200 plus million shares of GameStop and only 50 million existed. That's right. 5x. And those shares don't exist. This is why they took away the buy button. I've been studying stocks for the last 3 years every day since you've been awake. I wake up, I go to sleep. I wake up, I go to sleep. I look at charts. I look at balance sheets. I look at market caps. I look at sectors. I look at macros. And you know what's the craziest part about all this? People continually try to compare GameStop's chart with other people. They'll say, oh, look at this chart from GameStop. It keeps going down. It's cascading on down. It's a waterfall. It's walking you down all the way to the ground. And what they fail to tell you is that you've seen other companies like Carvana. I like that one a lot, just to point that one out. Like Bed Bath & Beyond, like AMC. And the unfortunate part is those stocks weren't the ones that were halted per se. I know AMC was halted. But AMC wasn't halted because it was this risk to the market and everyone crumbling. No. It was just a pump and dump. That's what happened in June. The buy button wasn't taken away in June from AMC stock. It wasn't taken away from BlackBerry. It wasn't taken away from Rocket Mortgage. It wasn't taken away from multiple other stocks, BBIG, GNS, CCIV, all the other stocks that have pumped and had a similar run like GameStop, but yet GameStop's buy button was taken away. And it was halted. And it was halted for more days than all the other stocks around it. This is what people fail to remind you. And I won't let them forget. GameStop stock was halted for 14 days. I want you to know that, guys. 2 weeks of being halted. These other stocks were halted for 2 days, 1 day, 3 days. When they try to name their stock that was halted, it's not GameStop. There is a problem here. There's a problem. And I went and saw numerous videos today, which I'm going to play for you, about short selling, about FTDs, and how they use them against the market. People want to talk about plumbing. They go, Marantz, you got to talk about plumbing more. All right, I'll play your game. I'll talk the plumbing thing tonight. Maybe one night a week I'll talk plumbing, but other than that, I talk about fundamentals. But Thomas Petterfield, He is the chairman. He is the head guy of Interactive Brokers, right? And he's telling you that GameStop was going to destroy the market. They had no choice but to halt it. And it's not because a hedge fund is upside down. No, it's because infinite risk would have ran you to the moon. Thousands and thousands and thousands of dollars that no hedge fund was pushing other than what they say, retail investors. Let's find out.
So as the rules are today, the long broker has to, if he can't get the shares, he has to go into the market and buy the shares at whatever the price is. So that could have pushed the price further up into the thousands. When that happens, obviously the shorts cannot pay up. So the brokers, they default on the brokers default on the clearinghouse, and the whole thing is a huge mess that's impossible to untangle. So there is a simple solution for this, the way I see it. Number one, we would have to get the short positions published once a day, because we currently have it only twice a month. And second, we would the SEC would have to require brokers to charge an additional 1% of margin for every 1% of short interest. And that would then raise the margins progressively so high that people would stop shorting stocks.
So margin requirements would have to increase as short interest increases. That seems to be the view from you, Thomas. I'm just wondering, from your perspective, overseeing a broker, is there anything you can do to protect your clients before the SEC or the regulator has to tell you to do it?
Of course we can. That's exactly what we did. We increased our margins. So
they increased their margin of requirement for collateral. Now, here's the crazy part. Look at the SPY on this day that he's talking. The SPY is all the way down to 3,900 points. We now know it's over 5,000. If you thought GameStop was a problem then, imagine how much they've actually pumped and offset their equity position with these swaps. You guys don't believe it's a swap. For whatever reason, GameStop keeps going lower and the market keeps going higher. But fundamentals tell me GameStop should be going higher. I'm going to let common sense sit on that. Let's hear it. Let's hear him say it a different way.
Founder and Chairman Thomas Petterfy. Thomas, good to see you again. Thanks for joining us. My first question is, are you surprised and or disappointed not to be a part of the hearing tomorrow?
Oh, no, I'm neither surprised nor disappointed. This is just fine with me.
Just fine. I can imagine. So what do you think will be the focus? Because there's lots of angles here, whether there was insider trading, whether the likes of Robinhood hurt their customers, and whether the likes of Citadel are abusing their power. What do you think is the key focus and the likely outcome?
So what I would like to point out here, that we have come dangerously close to the collapse of the entire system, and the public seems to be completely unaware of that, including Congress and the regulators. So let me explain to you that on January 26th, Game had closed at $77 a share. The following day, it closed at $148. The following morning, on January 28th, the stock opened at $355 and traded up to $480. At the same time, Game had 50 million registered shares outstanding and the short interest of 70 million shares. In addition, there were about 1.5 million calls, which would call for 150 million shares. If the longs repay their margin loans and exercise the calls, their brokers would have been obligated by the rules, as they are today, to deliver to them 270 million shares, while only 50 million shares existed. So when the shorts cannot deliver the shares, the broker representing the longs must, by the rules of the system, go into the market and buy the shares at any price, pushing the price into the thousands. So as the price goes higher, The shorts default on the brokers. The brokers now must cover themselves. They push the price further up. So the brokers default on the clearing houses, and you end up with a complete mess that is practically impossible to sort out. So,
yep, practically impossible to sort out. Yet they did. They halted the stock, they swapped it out, and then they reported instead of 130% short, 226% short. They reported 20 magically 2 weeks later. You guys want to know why people invest, why people think this is the short squeeze of a lifetime? It might just be that. But then some people will tell you right here on TikTok, they're telling me, hey, Marantz, how much are they paying you? They pay me nothing. Hey, Marantz, nobody wants to hear this. Okay. Nobody wants to hear just how bad it is. You know what's the crazy part? I'm going to play something for you guys, okay? And I want you guys to pay attention, please. I'm doing this because I do the homework. I do the homework because not only do I do the homework, a guy like Jay, who is a good man, a good-ass dude, he does the homework too. And I'm going to cue up this video because I want you to know so many things about it.
Funds. The first Vanguard Index fund was launched in...
Before we even get to it, this is going to be at the Wharton Business School, which you guys are well aware, the Wharton way, private equity, short sellers, the vultures of capitalism. The individuals that just happen to be manipulating this market. This is what they're teaching at the Wharton School of Business. They have this associate professor by the name of Richard Evans. And he's from Virginia, the Darden School of Business, which is one of the top tier business schools. This is about ETF, short interest, and FTDs. Naked short selling and operational shorting. Guys, this is everything you want. These guys do lectures about the playbook and the adoption of ETFs versus the market. And then inverse, when you put in a rule for no more failure to delivering, right? You can't fail to deliver. You got to deliver the shares within what? T+2 now instead of T+3. And or they go onto the restricted sales list. Or, everyone tell you that every night the PPCs and them are always cheering every night. They're like, oh, yes, they're on Reg Show. They're on Reg Show. And we've talked about Reg Show, guys. Regulations show what the means, Reg Show, what it means is that when you buy a share, I want to make this very clear to people because some people don't know the inner workings of the market. When I buy a share from said brokerage, they go to the clearinghouse. The clearinghouse can clear the trade, but they don't have to deliver a share. They can give you in place an IOU. They don't have to clear the trades for up to 2 days. So what happens is they actually find liquidity within that because they can short those same said shares that are floating in Never Never Land. They give you an IOU and they get the shares they need. And then inverse, when you do sell, they go grab shares from somewhere else. Now, if I want to short shares, I have to have the shares. Or how about if I want to write a covered call? I want to write a call contract for 100 shares. The whole point is to get the premium because you'll never exercise this call to buy the 100 shares because it's never going to go into the money because everybody knows the stock is being shorted and it's getting killed. This is what happened with GameStop. They went and wrote calls, okay? But instead of locating shares, guys, they called up BlackRock. They called up Vanguard. They called up Sixth Street. They called up Wedbush. And they said, hey, you guys have shares, right? Okay, cool. I know where I can buy them now. I know I can get them from you. So I'm going to go ahead and write these covered contracts. So they wrote naked calls. They're writing naked cover call contracts for 100 shares of GameStop. Boom, boom, boom. Guess what happened? All those calls went into the money. And when everything gets exercised and you have to go find those shares, the guys with the shares are looking at you saying, well, you want my shares, right? Well, I already said that I have them for you. What do you think happens to the price? How much do you think they actually have to buy them back again? This is why the volume went crazy. This is why the price went crazy, because everybody knew that they needed shares of GameStop. It wasn't retail moving the price. It was the markets itself. People know this, guys. People know this. Retail was along for the ride, but it was shock and fear because this system is broken. Let's show you how broken the system is. You guys want to talk plumbing? We're going to talk about it here in this video. and let's go.
Most of these academic studies on ETFs are the incredible adoption of this as a financial product. Worldwide, at the end of 2017, we had almost $5 trillion invested in ETF products, the majority of those in US ETF products. So you can see the decomposition across the different categories here. As a comparison point, worldwide open-ended mutual funds at 2017 had about 27 trillion in assets. We're talking about 16% market share. Now, it's not just the dollar amount which is staggering, it's also the rate of adoption. If we look at flows worldwide into ETFs, here by category again, from 2008 to 2017, there was about $2 trillion that flowed into equity funds, so net inflows into equity funds. Compare that to open-ended equity funds, it was only about $500 billion. And the point for me, which is maybe most striking, I think about adoption of this new financial innovation. Index funds, the first Vanguard index fund was launched in 1976. It took about 30 years for index funds to get 10% market share. For ETFs, it took about 7 years to get to that 10% market share number. So this is a problem.
So they're letting you know that the financial tool that was invented, called an ETF, it is being used today on this market to create hypothecated shares. Now, if you guys don't know how this works, he's about to tell you the inner workings. And yes, if you're going to fall asleep, if you're going to, forget about all this, this is not for you. I get it. But there's a part of this that is for you, because I want you to listen and watch and learn yourself.
Product that has been widely adopted and widely used, and for good reason. You can go long, you can go short, you can hold it long-term, short-term. There's levered versions of it. So there's lots of reasons why both retail and institutional traders have embraced ETFs. Now, as an academic, I'm a natural skeptic, and so when everybody likes something, I ask the question, well, should I be concerned? This rapid adoption of this instrument over a period of relatively good markets might mean that, the bottom has not yet fallen out. Now, I'm not going to say that that's true here, but I will point out the characteristics of ETFs that make us consider Dean Garrett's charge to think about what might play a role in the next crash. So what would those be? Well, number one, they're a growing force. $5 trillion in assets worldwide and growing quickly. In addition to that, they constitute a disproportionate percentage of trading volume. So over our sample period, looking at US ETF products, they're about 5% on average of market cap, and yet constitute upwards of 25% of trading volume. They're a hybrid, this mutual fund that also has individual stock-like properties. And underlying that hybrid structure is this very unique and innovative liquidity provision mechanism. We have these authorized participants who are looking at imbalances in the supply and demand of these and arbitraging the difference to provide liquidity when it's necessary. Now, that in and of itself, that mechanism is truly innovative. At the same time, those same authorized participants are the nexus of many markets. Spot, futures, options, security lending. They might be making markets and ETFs across different asset classes, geographies, industries. So when we think about a possible contributor to a future crisis, we look for points of linkages, and this is a point of linkage across many different assets.
So what they're trying to tell you right now, and what he's telling the room of short sellers, is that the ETF is going to get them in trouble. That now it's overtaking, just with only 5% of the market cap of all funds traded. We're talking about all the assets under management, $5 trillion worth, 5% of it. There's $100 trillion out there worth of derivatives and stocks and everything you want in your lifetime. This takes up 25% of the volume, meaning they're creating it and it is getting faster and faster every year. This is 4 years ago, guys. What do you think is happening right now? Why do you think so many people trade the SPY? Why do you think they play this game of SPY? What do you own? I own the SPY. What is the SPY? 7 stocks. This is how it's so easy and powerful to manipulate and swing markets via ETFs, via shorting the stock through the ETF. You guys know through baskets what happened to GameStop. You can put it into the retail ETFs. You can try to attack it. And then you see they just keep making synthetic, infinite amount of shares. Guys, to just take it apart, if I could even explain it to you guys this way, they literally can make an ETF share that has fractions of every single company in it. People know this part. And then they just take out the parts they want and they sell those off. And they repackage it a different way. It's unbelievable. You want to talk about shares that don't exist?
Asset classes, industries, geographies, and even different types of investors. So the big question we'd really like to answer is, does the increased investment in and trading of ETFs pose a risk for the market? That's a huge question. I will not, unfortunately, answer that question today. However, I will point to one aspect of these ETFs that is concerning to me and point out a nuance to how markets are made, this underlying innovative liquidity mechanism for ETFs that I think we should at least be aware of.
Pay attention.
I think for those of you who are quant practitioners, it has implications for how you use ETF trading, returns, etc., as signals possibly in your model. And I think for those of you who worry about regulatory issues, there's some aspects of this nuanced mechanism that have implications for financial stability.
Isn't that awesome? He's giving them a warning. Like, for those of you that have regulatory issues, meaning for those that violate the SEC rules, don't worry. There are ways to tiptoe around the rules. It's indoctrinated, guys. Listen to the verbiage. This is awesome. Here we go.
As it were. Okay. Now, when we started this paper, we began by looking at a figure much like this. Here I've got common stock fails to deliver in dollar terms. That's indexed on the y-axis here from 2004 to 2018. So the blue line here is common stocks. The red dash are exchange-traded funds. Now, part of what you see here, this big spike in 2008, is related to a paper that Chris actually and Adam and another Wharton professor, David Musto, and I wrote a while back. It turned out that market makers, or people who purported to be market makers, had an exemption to fail to deliver. Now, what is a fail? As described at the top here, it's a condition where two investors agree upon a transaction. They transact at time t, and then over our sample period with t+3 clearing, they don't actually deliver the security at t+3 like they're supposed to. So they owe that security. Now, that exemption was allowed for market makers in order to enable liquidity to flow through to the markets, but the paper we published suggested that there were some people abusing that exemption who were doing this, failing to deliver, not to provide liquidity, but rather to gain access to short position. If I can't borrow the shares from somebody else, why not transact from somebody, not deliver the shares, and effectively I now have short exposure. I owe the share to somebody else. Now, the SEC took that to heart. In the end there of 2008, early 2009, they passed the temporary version of SEC Rule 204, which became later the...
Now, we know, because we've done the homework before, that FTDs are reported every 15 days, right? Twice a month. They get reported. Back then in 2009, if you guys don't remember, it used to be recorded quarterly. I've gone over all the FTDs since then. And if you guys remember, I told you that the biggest FTD month ever was in 2009, 2010 timeframe, right there at the new year. So what this is showing you that FTDs went all the way down to the bottom. They passed a new rule. You had to deliver shares. You just couldn't leave them floating out there anymore like they were doing during the housing crisis. But look what happened to the ETFs along that same timeline. ETFs increased volume the whole way through now that you can't just FTD these shares. So how are they doing it? They're going to deliver their shares via the ETF. It is awesome for them because they figured out a new way to manipulate markets. And that's what they've been doing with GameStop, with AMC, with Bed Bath & Beyond, with Mullen Automotive, every single stock in the world, guys. This has been happening. But it's being taught at the highest level at Wharton. Keep paying attention.
The permanent version of SEC Rule 204 with some slight modifications. And you can see it had the desired effect. Dramatic decline in failing to deliver at that point in time. Now, before I had only looked at the blue line and saw that looked pretty constant, more or less, for stocks over time. But the first time I looked at this graph and I saw this increase in exchange-traded funds, I thought, maybe there's naked short selling of ETFs. Right? Lots of reasons you'd want short exposure via an ETF to an asset class, an industry, a geography, as it were. Over the same time period, you could say, well, ETFs were growing. Maybe.
Yeah, no, you're fine. Listen, I let you hear it from his mouth himself. What he's telling you is that they're using ETFs and FTDs together to short the stock. Now, everyone is very familiar with the most notorious ETF, and that is XRT. That is the retail ETF that contains GameStop shares. It is the most shorted ETF I've ever seen. Thousands and thousands of percent short. And people want to tell me that it's just because the reported GameStop is not being reported. No, that XRT number is not being reported. I'm telling you guys how crazy it can be. But hey, I don't want to be the guy just to be out here being, you know what, guys? This is how it all goes down. This is what's really happening, because I see it from a different angle. My angle is totally different than the other people. I see fundamentals, right? I see Ryan Cohen. I see GameStop for what it is. The sugar on top, the cherry on top is that what we call added value. That is the short squeeze that is possible. You can't tell me that you could have fixed this problem that's been diabolical for the whole market since 2010. I told you guys, they have been killing this market for 14 years. Who's going to pay for it? Or are we just going to keep printing? We're just going to keep giving raises to minimum wage. This is the way out. Now, I will tell you this. Somebody tried to send me this clip tonight about the PP show. You guys don't know it. If you guys don't know who the PP show is, it's another YouTuber who they got it wrong. They guessed on Bed Bath & Beyond, and we told them it was going bankrupt because of private equity. And we said, hey, you don't want to follow that money, right? There's certain money you don't want to follow. And it's private equity's money because they go to bankruptcy. And then you see activist investors like Carl Icahn, and then they're right there right away want to say IEP, right? Icahn Enterprises, and this is what they want you to be investing with. And they think they're buying and they're connecting with GameStop. And I'm telling you right now, guys, I will sell my soul and my shares. I'll do everything if I see Carl Icahn near my stock. That's how crazy I am about not having these vultures near me. I've read everything. I pay attention to everything. I'm going to give you an example of people talking about Carl Icahn and the stock that he's currently buying and what it does. Listen to this.
His is another portfolio similar to Dev Kantasaria's that I think is bulletproof. I think the companies that he owns are these highly concentrated industries, incredibly wide moats. In many cases, they're not an illegal monopoly, but they own very monopolistic-like positions in their markets. And he has very concentrated positions into the top 6. So he's really bullish on these companies, and I think they're going to serve him well. Now, next up, we have Carl Icahn, the legend himself, who manages around $11 to $12 billion. Now, I must admit, I'm not a fan of Carl Icahn. When I've looked through his history and his dealings with different companies, I find him to be more of an aggressive activist corporate raider that focuses on short-term gains, squeezing out profits at the expense of a company's long-term prosperous future.
So I want to make that very clear, okay? The Joseph Carlson show, this guy, he follows some stocks. I don't know. I just happened to watch, and then there you were. You heard Carl Icahn, and I said, yeah, that's him. He wants to squeeze out companies for short-term growth, short-term revenue. Boom, he's out. He's never been in a company long enough to see it be a healthy, productive thing, not even his own damn company. And when you see what they're invested with and you see how they invest, it's not something you'd want to do, not something I'd want to do. I'm going to talk about a lot of stocks tonight. I'm going to go over them for you guys. But the reason they keep, criming is because the ETFs can't be put on the threshold list, and they need it endlessly for GameStop suppression. Yes, Jay, that is absolutely correct. Individual securities get put on the threshold list, and that's the way it works. But you know, the whole reg show thing, I've explained that before, where they were borrowing shares, and then inverse, they were shorting those shares, and then they had to go get more, and they just got the same shorted shares because BlackRock kept buying their own shares that they kept loaning out. It was like a ring around the rosy. So I showed tonight, I don't know if you guys follow me on Twitter or not. My name's GameStop Echo, GME Echo or something like that. I don't know. Who cares, right? But I put up a post that showed Fairbanks Capital. If you guys don't know who they are, they're a hedge fund. And they have more GameStop shares than Apple shares, than Costco shares, than Facebook shares. They hold more GameStop than all three of those. They just increased their GameStop position by another 7%. It looks like big money is buying in on GameStop and no one's reporting it. No one is telling you that big dollars are buying in, but that's the case. So next chart we're going to go over here to these, the beautiful, the forever beautiful. It's going to be Webull. All right. So as we go through Webull, guys, and we see the stock market that can't quit, everybody was talking about the drawback day on Tuesday, and now it's back to pumping, right? And we're going. So we're going to talk about this in detail, and I hope you guys pay attention. And then, of course, I'll show you what I'm buying, and we'll talk about the dry powder that I have sitting and I'm ready to go. My dry powder, you guys know this. Every day I buy a share, whatever it may be, $15. I'm good. I'm going to increase that by another share. I'm going to buy 2 a day, but I'm still waiting for the right moment for some money to clear. And then when that happens and wifey's happy, I'll be able to get my 51 shares that I really want. So 51 shares every day, 51 shares. That's my total position. That's just a play on words for us here. It says it should happen, makes sense, but can and will they let it crash? I don't know what they're willing to do, but I do know that only one stock captured the hearts of America, that you saw it happen, and now everyone tells you don't buy it. Everyone tells you get away from it. It's like the ultimate do not touch. And the more people that lose, the momentum of what it is and what it can be and the growth. I have people, I've been holding it for 3 years and it's done nothing. It's like, okay, yeah, I'm sure your parents felt the same way about you for 18 years. That's not a long time. 3 years is not a long time. And Ryan Cohen's only been on the job 141 days. So I'm okay with what they're doing and the way it's going to come out and the way they're going to show. But you guys saw me talk about Abercrombie and Fitch and how that's just being pushed. And they're half the earnings and half the market cap and half the cash and no debt and double the debt. And they're everything that GameStop's not. That's the point. And yet they're still getting 5X in the last year. GameStop should not be suppressed. It shouldn't be going sideways. Certainly not while the whole world's buying. And I know you guys think the whole world's not buying, but you're buying, I'm buying, and institutions are buying. I've already seen Vanguard, BlackRock, and numerous other people. Millions and millions of shares have already been purchased this past quarter. So either we're all getting ready for this pump that's coming and the run of it, and or these shorts one day will have to turn long. But if they're buying shares to loan out more, well, then let's do it. Let's dance another 3 years. I don't care. Nothing's going to get me down because I do own other securities that hold me tight. They do. If I was just in GameStop, would I be nervous? No, I wouldn't be nervous. I'd be more happy, but I can't transition out of the ones I have because I have great buys right now. But let's talk about the Dow Jones. The industrial Dow Jones here, you're at 38,000 on points, and it's all-time high, right? It's going to break 39,000 next week. That's what I see happening just based off the run that you're getting. But this is the pump. This is the pump you need to do to the markets before you see what GameStop is. There was a crypto pump way back in the day, 3 years ago, before they let GameStop run at a point. But right now they're pumping these markets. Eli Lilly is undefeated. We talked about this in the past. We talked about this last week. And right now they announced the dividend here at $1.30 a share. And is that a lot? No. But dividend yield is practically zero, 0.69 for all you knuckleheads out there. But 757, my God, it's too fat for me. I'm telling you right now, it's too fat. The forecasted PE ratio is 60, guys. You're not buying something that's established, it's been around for years, at a 60. It's just not there. This is too top heavy. The market cap is $720 billion. This is a very expensive stock right now. So if you're in it and you've been in it for years, like I was almost in this damn thing 3 years ago. I knew about it. I talked about it even on this channel. I talked about it on this channel 2 3 years ago. I know that for a fact, and I didn't go get it. It's one that I missed. I'm okay with it. I'm okay with missing, though, because there's no opportunity cost for me when I'm buying things I love. Next is going to be NVIDIA. For me, a $1.8 trillion market cap is too heavy. I think AI is being overpriced right now. I think it's the fad, to believe it or not. There are going to be some winners here in this world. It's going to be Palantir. It's going to be NVIDIA. The semiconductor group, I don't know. I don't know if I really like them, but some people do. Some people buy things, but I just don't buy them this high. And I think it's way too high. I think the dividend yield at 0.02 is not there. But the most exciting thing for this is that earnings is next week. Earnings is on 2/21, and when they announce what they announce, that's going to tell you whether or not it's going to come down. For me, I think it's coming down no matter what, because there's nothing that they could announce that could keep it going up. It's just not there, guys. You're looking at another PE ratio forward forecast of 60 again, 58 and 60. These things are double what they were previously. So it's just not there for me. Costco, you heard me tell you, I can't believe that it bounced back up to 724. I love the company. I love the stock. I own a lot of it. Okay? I'm fair with you guys, but I'm just telling you, I'm looking more in the realm of 704, 705, things of that nature. Sorry, Sammy, but I'm live over here. I apologize. I can't do that. And they want me to go live on TikTok, but I'm live with you guys. The forward FE is going to be 45 at the moment, but it's going to be even higher than that, dependent on what the earnings are. When earnings come out, and if earnings aren't top heavy, you're looking at a PE ratio for the trailing 12 of 79. 79. That is massive. Again, it's more expensive. This stock is more expensive than Eli Lilly and Nvidia, based off of those PE ratios. So once again, I don't understand. I don't understand how they give these guys these evaluations. I used to see Netflix really high. When did we see Netflix really high? Back then, right? 700? Yeah. So 700 right in 2021, peaked out really high that day. That was when GameStop was pumping, and now it's down and it's pumping back up, all the way back up. Remember, it fell down to 160s, almost 150, and now it's back up to 593 2 years later. Subscription base is strong. The stuff they actually produce is strong. You're looking at PE right now in the trailing 12, PE ratios of 49.50. These are high PE ratios, guys. I want to make this very clear. Established companies like these, ones that have been around forever, ones that are not doing any turnaround, ones that are showing you continued growth, they shouldn't be 50 on a PE ratio. They should be 20 to 30. That should be the buying range, pricing-wise. SPY over 502, touch 503 today. I mean, just ridiculous on this stock, guys. I don't even know what to tell you on the whole market itself. You guys know it's the ETF that runs with the actual index, the S&P 500, and SPY is crazy. Meta, pushing, and it always has, and it always will, apparently, and that's Meta at 488. That was the all-time high, and it's touched it all, guys. This is just something different. It's not something that I'm in, but man, it's all AI pushed as well. QQQ, all-time highs. Look at this. We're going to do this all-time highs. I don't agree with Home Depot. I know a lot of people like Home Depot, mainly for the dividend, but me personally, I don't agree with it. I know their balance sheet. They're one bad earnings report away from completely falling apart. And their earnings are going to be in 5 days. They're on the 20th. So next week is Home Depot earnings. Get ready. Tesla, what a buy. What a buy. At $200, what a buy. It fell off the face of the earth over the last 3 months, and everyone's talking about it. Everyone thinks this stock is falling out of the S&P, falling out of the Mag 7, and I'm just telling you that price way down there in the 200s is phenomenal. We saw it at 175 a couple of weeks ago, and everyone wanted it then. I'm just telling you that's a crazy price. At $200, I think it's crazy. I think it's a good price. That's what I'm saying. I don't think it's bad. But I don't support the company, right? Like Elon Musk is all talk. If you guys know about Elon Musk, he recently said that he wanted to incorporate in Texas and not in Delaware because Delaware, they fought him on his pay. He wanted to get paid $58 billion for the year. The company only made $15 billion. Previous year, they only made $10 billion. I don't think he warrants that money, but apparently everyone out here is a freedom fighter for Elon Musk. I'm not, but he's already the richest man in the world. You need $58 billion more? I mean, give me a break. But I will tell you, he hangs out with Ken Griffin. He's in the same press box. I'm not a fan, but he's all hot air. He moved SpaceX, that incorporation of that company, over to Texas, and that was like his flex. No, flex is tell me where Twitter and tell me where Tesla is incorporated. They're going to be in Delaware. No franchise tax. There's no sales tax. There's so many tax implications like in the favor of the company and the investors that no one would want you to leave Delaware. It's idiotic. 92% of all the S&P 500, the top companies in the world, 92% of them are in Delaware for those reasons. So miss me with your bullshit, Elon. I call fake. I call, a telephone tough guy type stuff. You're not there. So we're looking at Tesla. We understand what it is. Apple, same thing, falling down Apple because you know what? the Apple iPhone is going to be number 16, right? I think they peaked out. I think it's at the top of it. I think $3 trillion was really high for them. They're down at 2.84. They're below Microsoft at the moment. But I'm not a big Apple guy because I felt like Apple's just at the top of everything right now. Like, how many more? Where's the new product? I know the goggles are a new product, but it's $3,000, $2,500, $3,500, whatever the hell it is. And I don't think it's practical. I think the first kid wearing them is going to get his face punched in and they're going to get stolen. Like, that's just not practical for me. You'd have to wear them at home. But Apple's not the stock that I would buy at this price, me personally. Amazon, same deal. When I look at Amazon, they have a current trailing 12 PE ratio of 58, almost 60. To give you an example, Apple's at 28. Apple's right where you want to be, 28, right? Tesla's at 46 and a forecast of 65. Home Depot is at 23. Solid company, been around for years. They should be that low. That's what I'm telling you on like pricing. P ratio for, let's say Meta right here, 24 or forecasted, 32 on the trailing 12. 32. That's really good. I mean, I guess that's the price where they want it. They want more. They're making more. I guess people want to buy it at that price, but no one's buying these stocks. Like when you buy Walmart, and you know Walmart has a split coming, right? So Walmart has a split coming. They have earnings coming. And their PE ratios are at 26. That is ideal for retail. So if GameStop can get close to 26, 28, 30s once they're established, then you know it's the right buy and they can keep going. But when the stock price, I mean, guys, GameStop's going to be in the teens, in the 20s, and people don't believe me. That's how much money they're going to make for the amount of shares they don't have and the price of the stock. It has to go up. The price cannot be $14. The price can't be $15. They're going to be making 50 cents a share, guys. They're going to make $1 a share. They literally will be making $1 a share. Like, I know people don't believe this part yet, but they're going to. Maybe not this quarter, maybe not next quarter, but in the next couple of years here, they're going to be at over $1 a share. Can you explain the PE ratio? Yes. So PE ratio is price to earnings ratio. That means the value of the stock, what you pay for it, versus the earnings the company actually produces. And that ratio is a simple metric, right? The multiple is it takes this amount of years to get your money back. Usually 20 to 30 years would be ideal. If it's less than that, if it's 10 years, that's an investment worth making. So if you see a PE ratio of under 10, you should be buying it because that means that it's undervalued. The price is too low. When the price, you have to find that equilibrium, that happy medium place. So if the price is 70 PE ratio, are you going to buy it because in the same sector, something that's 60, like all these damn retail companies are off at 60. Walmart's at 20. I should be buying Walmart because I'm getting more bang for my buck at 20, at a 28 PE ratio. That's the difference there. You don't want to buy the 70. You don't want to buy the 100. That means it's not making enough for the price that it is. So there, I'll explain it that way. But let's go to Google. Google, I'm a big fan of Google. I work for Google. You guys know that right here on YouTube. It's AdSense, it's YouTube. They own it all. It's the premier spot, and it's a 20 on the PE ratio. This is a buy every day of the week. It's a hold every day of the week. It's a damn good company for what it is. The value's there. Everything's where you want it to be. They don't have a dividend yield. So until they start announcing dividends, I guess people won't be happy or satisfied. But this is a good company, and I just believe that because I'm part of it. Best Buy, not just because I'm part of it, though. Best Buy, as you can see, I drew the lines a long time ago. They couldn't hold up this level of support. They stood below the top line. It's like they bounced off this arrow, right? They hit it, and then they bounced down. So we called it perfectly, even on a bull run for here. But Best Buy's losing. Guys, if GameStop's winning, someone's losing. And Best Buy's losing. They're losing in the entertainment sector themselves. If you guys know that category, that was their only category. They were in the plus side, but yet they just recently announced that they're going to shrink their physical footprint from physical entertainment media, from media itself. So, yeah, it's not for me, but their PE ratio is super low for what it is. This is an established company. This is something that people do buy. Their dividend yield is massive at 4.93% for the $74 price range that you're buying. I think this is like one of the strongest companies that I've come in contact with buying the shares themselves. I just don't ever see it moving. This is like Coke, right? Like you buy Coke, Coke's a little bit better. But you're going to buy Best Buy, you better hope that they're going to be around for a very long time. You got to trust that management team. And me personally, I don't yet. I've been reading, but the value's there, the balance sheet is there, and they do make profits. So Best Buy is one of the top 20 retail companies in the world. So it's worth investing. Yeah, and the price is right. I'm just telling you, price is right every damn day of the week. But I don't want them to start falling off. Like ASO is terrible. This is something I'll never buy. I don't care if the P ratio is 10 and 9. No, don't care one bit because they have a dividend yield. They're going to burn through cash. They're private equity nightmare, and this is not where you want to be, this company. I already know because I did the homework. You're buying the top of it, and I won't. And I won't. Carvana, bankrupt company. This is a dead man walking. This is the Green Mile. This is Con Air on a jet plane, and it won't be coming back again. I'm telling you how bad Carvana is. I've been saying it for a year, and I'm not changing my tune. They are upside down $7 to $10 billion, depending on when you want to ask. Additionally, their PE ratios are in the negative. They lose money. Their forecasted PE ratio is 600, meaning the price of the stock is so far from the value they do not make. They have only had one quarter where they produced a profit, and that was during the pandemic. This is the most brain-dead company that anyone could ever buy into, and you should never touch it. My honest opinion. Is this, let me think about this for a second. Is this financial advice? It's advice, all right. It's life advice. I'm just going to tell it to you like that. This is the worst stock you could buy. Apollo Global owns 90% of their shares along with PIMCO and Trust. And I'm just telling you, this company will file for bankruptcy soon enough and or get carved out. All the assets gone, everybody out of this damn thing. Carvana's the worst. The absolute worst. And if you guys don't believe me, I'm telling you that we can all look at it in 7 days. Earnings comes out in 7 days. And I'm going to tell you they're going to lose $200 million. Earnings comes out in 5 days, 10 days? 10 days? Hold on. 7 days. Earnings comes out in 7 days. And I'm going to tell you that Carvana is going to lose $200 million minimum. Minimum. It's a walk in the park, babe. What is that? The quarter one margin call on Magrano is looking lucrative. Okay, good for you. Normal customers go there. His video called them out. This is crazy. Yeah, sure. Carvana's terrible, guys. You'll see exactly what it is. This is a pump on Kohl's. We've talked about Kohl's in the past. This was a pump. It was a pump fake. You guys ever seen a quarterback drop back and he goes like this and he drops his shoulder, he actually going to throw it, and then he cocks back and he doesn't. That's exactly what private equity did. They came in and they offered up a price of $70 a share. The stock is at $29, $28, and they offered $70 a share and they turned it down. Does anybody know why they turned it down? Like, do you guys not understand like how valuable this company is? I'm going to tell you how valuable Kohl's is to the next guy that walks in. Total assets is $15 billion. Their market cap, just so that we're clear, guys, market cap is at $3 billion. 5x, okay? 5x is their assets. So take the stock price. Their market cap is $3 billion at $28 a share. Yet their assets are 5x that stock price. This is why when somebody offers you $70 a share, you go, oh, hell no. That's 50% off. You guys understand? Because they can dig out those assets out of there. Remember, they have buildings. They own the real estate. They don't lease. They own. And when they do sell their buildings and lease them back, that's the private equity playbook. So all they did was someone came in and said, hey, I'll give you $70 a share. And that pumps the price because people go, oh, wait a minute, they might sell. We're going to get $70 a share because if you go buy in, then that's what happens, right? Go ask Twitter. Guys, that's the dumbest shit you've ever heard in your life. Macellum, Antura, and Legion Partners run Kohl's, the same three hedge funds that ran Bed Bath & Beyond. And what did they do? They pumped out all the equity out of the company. And they left them dead on the table for bankruptcy. This company, Kohl's, it's going to take you 5 to 10 years. It's going to take you 3 to 5 years. I don't care how long it takes you, but they're going to get it. They're going to get that $15 billion worth of assets out of that company. They're going to suck it out of them. Oh, yeah. Prostitute and all, babe. This company is not what you think it is. This is not going to play out the way you want it to. $28 and they're pumping and pumping. They make $0, guys. During Christmas last year, they made like $20 million. Oh, you know what? Don't let me just say it. Let's go look. I just want to make sure I do this right. So let's go quarterly. And let's go to last year when it was reported right here. They did $6 billion. I wouldn't want the revenue. I want the balance sheet. Or the income statement. Sure. Look at this. They lost during Christmas, guys. Operational, we'll go to net income. Lost $273 million during Christmas. How do you lose money during Christmas? Unless you want to. Unless you're doing it yourself. Unless you're over leveraging, spending $1.5 billion on CapEx. Oh, yeah, cap expenditures. You guys realize what they're doing over there, right? They're borrowing money. They're leveraging their assets with the money they borrow. Look at what they made the last 2 quarters. Oh, you think that's good? 14 million and 58 million and 59 million. Oh, that's good? Maybe you guys missed the fact that they have interest payments more than that. When we go to the balance sheet and you look down here, and you look at shareholder equity, $3.75 billion shareholder equity. But how much of that is just propped up off the cash they took on long-term? Look at this. Capital lease obligations, $2.71 billion. $1.64 billion on long-term debt. They borrowed $1.64 billion, guys. There's no way that they're able to pay this back. They just keep sucking out the debt from the company. Like it just keeps going. It's going to get worse. Look, can I give you the truth? Look at this. $5 billion 2 years ago on shareholder equity. Watch. $5 billion on shareholder equity. $4 billion a year later. A year later, $3 billion. They're going down. Billions of dollars. Because they're sucking it out of this company. And that's private equity. And that's why I talk about it. And that's why I'm so confident on what's happening at Kohl's. Because you know what? I study it. I study bankruptcies. I study private equity. I know some people don't, but I like to get dirty that way. Bro, these hedge funds might send some good fellas to chat with you speaking their name. Yeah, Rick the Freak, they do. They already have. They've already attacked me at work. They've already attacked me professionally on the job. They've already followed me. They've already put my home address everywhere on the internet. They've already put pictures of my wife and my kids up and told them to go get them at school and work. They've attacked my name. They've done everything. They followed me with the video camera, recorded me. They've done everything they could possibly do except kill me. So I'm waiting. I'm waiting patiently because I've lived a long life already. And I already have the 2,000 videos on YouTube that explain everything. I have 63 episodes of Connect the Dots on YouTube. Google it. Marantz Rantz Connect the Dots. I've already explained how they do it to America. And this is why we can invest the way we do. This is why you don't catch retail off guard anymore. At least anyone who watches this channel. You can't. We can name a company and we go, oh, no. Mullen Automotive? Oh, no. I knew not to touch it. I don't care. I wear the shirt. Says Wall Street, and on the back it says my damn name. It says my damn name on it. I walk around letting you know what it is and where it is, and you know where to find me. I'm not afraid. You live in fear, you're not living. Palantir, you better put some respect on this damn company. This company here is run by Stanford grads. It's not private equity. It's a bunch of smart ass cats. And they have contracts. And those contracts are expensive, guys. We're talking $40 million a piece. They don't have a lot of customers. But now they're up. They're up to 497 customers here in America alone. And I'm telling you guys, they've increased. So now they showed 5 quarters of profit. They showed that they're a profitable company. And the stock did what? It doubled. It went from 15 to 25. It went from $5 just a year and a half ago, all the way to $25. It's a damn good company. And I won't even speak on it other than that. I'm just telling you, until they show more profit, it's a little overpriced. I'm just going to tell you. The PE ratios are at 78, respectively, on the forward forecast. And the trailing 12 PE ratio is 278. Be careful. Be careful. It's a little overpriced, but you know what? People are going to pay for it because AI is overpriced right now. And that's the way it goes. Miniso Group Holdings. I told you I like this company. I like what they stand for. I don't know them personally, but I like the price. Every metric here looks right, but I don't trust China when they report stuff because you know what? I do my homework. So be careful. I did buy into this. I made my 20%. You guys know I bought in at 18, sold at 22. Right now, I'm looking at 5 companies that I'm invested with, and we're going to talk about them in a bit. I'm just going right now on this. This is GameStop, still holding those levels of support. You guys see it there. It hasn't dipped down below the line too much, but you know what? It tags it a little bit, but I love GameStop. GameStop has to be the best buy on the market, period. Best buy on the market, period. I don't want to hear it. I don't want to hear you missed it. I don't want to hear, oh, it already squeezed. I don't want to hear that shit. I'm telling you right now, GameStop is the best buy of my lifetime, maybe yours, I don't know, but at $14.51, you are crazy if you think GameStop's only worth $4 billion on market cap. If you understand, that's not even their sales. That's not even gross sales for the year. And yet they have $1 billion of cash in the bank. They have zero debt, zero corporate debt, period. And they have the greatest leadership team. Therefore, you invest on that. You invest on the people that are invested in it, and you see everyone lining up their cards right now. You see BlackRock increase their percentage. They own 3 million more shares today than they did 2 years ago. They have been building up their little nest egg on GameStop. Vanguard holds over 25 million shares of GameStop. They just increased their stock by 500,000 shares yesterday. Everyone's lining up for GameStop because they know what's happening next month. When they announce their earnings, they're going to come out with a beat. They're going to beat the earnings per share. They're going to beat the PE ratios. They're going to beat the forecast. They're going to beat Wall Street. They're going to beat everyone who's ever been against them. And why is it? Because they have been sandbagging that number for 2 years now. And I have been telling it to you for 3. For 3 years, I have been telling you what's about to come right now. The moment when everybody told you this company is dead, it's a dying business model, nobody shops there, gaming is going digital, it's gone, they're going bankrupt, Ryan's a failure, you're an idiot, you're dumb money. When all of that was happening, all I was telling you was, I like the stock. And why do I like the stock? Because the fundamentals make sense. Because if nobody shops there, then explain to me the $6 billion worth of sales. Explain to me the profit margins. Explain to me the cuts in SG&A that then in turn churn up 27% of gross profit, of net profit. Tell me how in the world you think that this company is not going to be around for the next 20 years if I say it's going to be around for 20 years. Because I'm going to make it happen. I'm going to manifest it. I'm going to shop there my damn self. I'll buy this whole company myself. And you think it's a joke? Well, let it be my running joke. Let me keep buying my shares one a day, one a day, one a day, one a day. And in 3 years from now, you're going to wish it was you. You're going to wish it was you because I'll tell you what, 5 years of buying one a day puts you in, I'm not good at math, about what, 1,500 shares? Hey, some days I tag a little bit more, right? So now we're sitting, what, at 3,000 shares? Don't you wish that was you? When they announce they're going to pay a dividend, when they announce they're going to be in the S&P 500, you're going to want to be the guy in GameStop or don't. I'm not going to lose sleep over it. You know what people say? Nah, I don't even shop there. I don't even shop there. Oh, okay. Where do you shop? Let me explain to you. You don't shop there. You don't shop there enough. I'm with you. I agree with you. You don't shop there, but maybe you should. Maybe you should, especially if you're invested. That's one thing. 2, maybe the value's there. Maybe there's a value creation that we can talk about. The rewards program, the fact that I don't want to go ahead and contribute to what is Walmart, Target, Best Buy. No, I'm going to go ahead and go to GameStop and buy these games here. They have the categories, everything's available to you. You grew up with it. It was a fabric of what you are and what you've done if you are a gamer. You were there for midnight releases. You take your kids to these now midnight releases. Look at your kids light up when they go shopping there. How about same-day delivery? They're doing everything they can, omni-channel and omni-marketing. Their CEO gets paid $0. He works for free. He put his money where his mouth is. He put it right behind the company. And in addition to putting his money where his mouth is, he put his energy where his mouth is. He put it all in there. Monica Lewinsky, this damn company, and I'm all in with Ryan Cohen. And I'm going to do it forever, guys. I'm telling you, I love the stock. I get excited about GameStop. That's the one thing that gets me just going, guys. I'll go to sleep right now with energy just flowing through my body, and I'm going to sleep because I'm going to daydream about I don't need lottery tickets in my pocket anymore. Growing up, I used to need lottery ticket. I used to have, man, the lotto's tonight, man, 600 million. Give me that ticket. just because I wanted to be like, you know what? I might win. And what would I do if I might win? I don't need that anymore. Now I'm gonna win. I'm gonna win. There's an account with 3,700 followers posing as you. Billy Davis, I don't care, man. I don't care. The more, the better. Let them be me, man. Let them make it in life. I've learned not to get worried about it. I can't control people stealing my name, image, and likeliness. I've got an account out there called Rico Knows who stole my image, my takes, my info, and he's got almost 200,000 followers on TikTok. That guy stole my stuff, bro. I don't care. Let it go. Let it go. Like they say on Frozen. Let it go. Let it go. I can't hold back anymore. Let it go. Let it go. Turn around and buy some more. I don't care what these haters say. GameStop never bothered me anyway. Never. That's what it is, bro. What's the point of going live for two people? Oh, you don't understand. Oh, Jordan, you don't understand. You think it's just two people. That's the unfortunate part. You think two people broke their thumbs getting up there for all these thousands of likes? Or maybe I'm looking for one person. Maybe I go live just for one person. Because on YouTube, how many people are live on YouTube, guys? How many people have come to a live stream so far? 443. Maybe I'm going live for 443 people. Is that okay for you? Because I'm actually doing it for one person. Brick by brick. And when I find that one person that wants to learn what GameStop is, what it can be, what it will be, what it should be, then they understand. But somebody has to be out here talking about it because you're not. You're not. I will. Don't worry. Let me and my one do it. Marantz pumping GameStop like the dirty grifter he is. That's right, Bob. SpongeBob, I just want to say thank you for the $2, bro. I would never have it this way. I would never have it this way if you didn't send me $2, bro. Matter of fact, send me more money because I can't do this without your $2. Oh, I can't do it. AMC stock. Let's talk about it. Look at this shit. Hey, guys, that's in the shape of an L, okay? And that stands for loser because if you're buying this damn stock, you're losing. And so is Adam Aaron, this guy. This is a stock I'd never touch. One, movie theaters are dead. That's a dying industry. Yes, factually. It's a fact. But they can't exist. They just can't exist with $5 billion worth of debt. They can't exist with an executive team that owns 0 shares and doesn't do the right thing for the company. They can't exist when private equity is leveraging every move they do. They can't exist when they invest their money into dying other companies, other private equity dreams like HYMC. They can't exist when they pull out 50% of the equity from the shareholder via the APE creation of what they call additional preferred equities. They can't exist when they're doing backdoor pipe deals with Entera. They can't exist when they're offering up their company every month, every quarter, 25% of their company for pennies on the share. They can't exist when every time the stock runs, they dilute the float and they drop it even more. They can't exist when they have I don't want to say pedophile, but I want to say a man who sex tapes and or sends naked photos of himself to allegedly underage ballerinas and or 19-year-old women while he's 69 years old. They can't make it when their CEO is gifting shares to his kids for $30 million as a one-time gift because he's estate planning. They can't make it when they're overpaying for advertising. And you see Nicole Kidman come out and he's spending $25 million for a movie theater to advertise is the most outrageous thing ever. It's so outrageous, guys. The movies already advertise themselves. What the hell do I need to advertise to tell you come watch it at my theater? How about just go watch that movie? I don't care where you watch it. The more people, the better. How about this? Everybody go to Cinemark. Because then when it's sold out there, you're forced to come here. I didn't have to go ahead and put it up that way. That company's dead. That price is dead. $4.89. Market cap of $1.2 billion. It is worth absolutely nothing. Guys, it's worth nothing. I don't care how many deals they do with Taylor Swift. Taylor Swift made money off that deal, not AMC. I'm going to read the chat before. Oh, no, you know what? I'm not going to read the chat yet. I have the hit list. We can go over the hit list. You guys know we're trying to be better than these companies, which we already are. Restoration Hardware lost $1 billion. Look at this crappy company, just falling to pieces. It's nothing I'd ever want to touch. And their earnings came out, and of course, they went up and then right back down. They lost everything. Trash. The company I'm trying to catch in this whole group here is going to be Burlington Stores. If you guys don't know about Burlington, I just saw a TikTok, actually, of a young lady who said she's the only employee at the whole store. And it's all, hey, and guess what? There's a line all the way through, and her wrist hurts, and she's all alone. That reminds me of the GameStop stories that used to go out. Remember when private equity ran GameStop, and they ran it like a slave ship, for the lack of a better term? And you would see it, and the guys would be disgruntled. And then those employees would go to Reddit and post and say it's the worst place to ever work. And then they would make YouTube videos, and they would just bash the company. Ma'am! You remember this? That's not GameStop now. GameStop runs a profitable store, a well-lit store, a clean store, neat, clean, and straight, delight the customer. They're changing the culture of the company. It takes time. It takes time. But Burlington, I want to see you. Ooh, baby. I want to know what this is. I want to know, man. I want to know if he really loves me. All right. What I'm buying. What I buy and why I buy it. Here you go. So I've been buying CRVS. I had once bought this a long, long time ago. If you guys remember, I bought it when it ran up to $10 in 2021, right here. So I bought it down here at $1.80 something, I remember. And right when I bought it, it shot up to $9.54. That really happened. It was live on the stream. I did that 2 to 3 years ago. 2.5 years ago, I did that. And I was like, oh, okay. Caught it. Well, look what it did just a little while ago. Pumped all the way back up to $4.19. Came down, touched down. When I saw it touch down at $1, I said, okay, let me see if it can recover. It recovered. And it's recovering. So I said, all right, I'm jumping in. That's just me. I don't need you guys to do it. Please don't follow my suit. I'm in. It's doing great. I'm leaving it alone. I'm going to get my 30, 40% out of this, and or I'm going to get my 400% like I did last time. We'll find out what it is, but I play with it. Peloton, another company that I'm buying at the bottom, the very bottom, down 97% over, from the all-time highs, and it's just prime for me for a turnaround story, 2-year turnaround story. I'm going to see what it does for a while. I just think the RSI is running so low. It's very low that it has room to run, has legs, but I'm trying to get my 30, 40% out of it like I do every time. Riveted. Yeah, I like Riveted. I know some people don't. Some people tell me, be careful because they borrow money. But remember what I told you. The bond money's not due right now. They have over $8 billion of cash on hand, and they can run out of their cash, sure. But I want to see what happens because I think that 16, 15 in that range is a good entry for me. I'm going to see what it does. I'm going to go from there, and that's just me, okay? So I'm going to give them about 2 years. I'm going to go that route. Costco, I buy Costco every single week. I buy on the average about $200 of Costco. No, every 2 weeks. So $400 just of Costco a month. So I'll buy 400 automatically. It's already in. Boom, boom, boom. But I'm doing about 3,000 on Costco next month. So I'm going to do 3,000 more. We'll see how it does. You guys know that I went 20 grand deep in March. Showed the buy order in the Discord. And that 20 grand turned into $31,000 in 9 months. So did pretty good there. I'm still doing good. And the dividend paid out. They had a special dividend where I made money on that too. And it's a great company to own. But of course, I own GameStop. So there's a rundown of the stocks that I cover. If you guys ever have one that you guys want me to add to the list, I can. I will do connect the dots on the company if you need it. I talk about it all the time. They don't know, but Rantz knows. Absolutely, Daryl. That is correct. But hold and dot collar average till the grave. Bad stocks are bad stocks. Sure, Steve. That's true. How much are you into GameStop for? Right now, it's sitting at around 24% of my portfolio. 24%. So a quality amount. I would just tell you that. A quarter of my portfolio, but it keeps going up because it'll eventually take over 50% if I keep at it the way I'm doing it. So I'm gonna spike. I'm gonna throw a little bit more at it coming up. I'm gonna splash the pot, but I'm gonna splash Mama's pot first because I got some money, and I'm going to give it to my wife because I think that she would be better suited for the money right now. Like, it gives her a comfort feel. I don't know if you guys are married. Right? I'm married. Been married 17 years. And the thing that makes my wife feel great inside is when she's holding on to a large stack of cash. So she doesn't have to second guess about getting something for the family or think about it. She just goes and gets it. So I'm very fortunate that I work hard for my money and I'm still grinding. So, but I think I can still splash. Right now, investing wise, this year, I'm on pace to invest on average around $1,500 to $2,000 a month into the markets. So I'm choosing on how to invest that. And that's a real number. I know you guys, probably not a real number for some of you guys, but that's where I'm at, about $1,500 to $2,000, depending if I have a good week or not. So that's it. I'm an easy guy, and I'm going to be easy, but I've been doing it for a long time. So no, when you did it in your 20s and you learned a lot, then you get to your 30s, you start making more, but your 40s are your money-making years. And your 50s, well, that's when you ride into the sunset. So let's do it right, and that's my plan. So I'm going to read the chat now, guys. You guys know that I go live every evening. I try to. I'm going to try, what's tomorrow? Friday? I will be going live tomorrow night as well. So we go live, we talk about the market for the day, and then we talk about, stuff coming forward. So, and that's just the way it is. And then, of course, we'll talk about any drama we got going on out there, any nonsense. But I'm down with you, and I'm down for yours if you're down for mine. And thanks again to Abe for gifting the channel with 5 free memberships. Thank you guys so much. For the supporters of the channel, the guys who give out, the super chats, the stickers, the likes, the subscribes, the joins, all that. I just want to say thank you for showing up and watching the show every day. Thank you guys. YouTube loves you guys. I love you guys. And it means that I can do this more often. So I have more time to study, more time to do my things, and I'll make that happen. Does it mean you're shooting blanks? You know what, Abe? I'm not shooting blanks, bro. I don't think I am. But, my wife and I, we closed down the factory. We just told each other we're not going to have any more. But yeah, I'm not shooting. I don't think I shoot blanks. I don't know. Look like dry powder went to super micro. No. Am I a few minutes late? Had to go piss off Rico on TikTok. I didn't even know Rico's live on TikTok right now. That's hilarious. But there you go. God, I love this clip. Thank you, Mike. We all do. You go and piss off Rico, that's good fun. Yeah, just ask Rico, like, what do you know about stocks, bro? Hey, are you Marantz Rantz? Just do that, man. That's hilarious, bro. What about Instinet? Yeah, they were short. They were short about 50 billion on GameStop. So we'll find out what it's all about. Guys, this is the best part about investing in GameStop is we know that it's the one. But like not knowing what they're going to do next is like my favorite part. It's like unwrapping a gift every day. It really is. Like, I don't know the outcome, so I'm going to find out. That's it. It's like a lottery scratcher. I just keep scratching. But this one is going to win one day. GameStop is the only stock in the stock market that crashes upwards. Cool. I agree with that. Feels good to be living in Missouri. Super Bowl, baby. Kansas City Chiefs. I mean, Wayne, I lived in Missouri twice in my life, and I will tell you it's miserable. It's the show me state. Nobody even knows that Kansas City is in Missouri. They think St. Louis is Missouri. Hell, Springfield has more of Missouri than Kansas City. So, yeah, I'm not a fan of Kansas City per se, and I'm definitely not a Chiefs fan because Adam Aaron likes to, associate himself with the team, and I don't like that. Amber and Sharon and everyone in here, we love you guys. Yeah, sure. Nah, it's still, I don't really like plumbing. Shit rolls downhill. Oh, okay. Literally, that's what he's talking about. He's a plumber too. But there you go. The Truth Hammer is killing it. Thank you so much, man. By the way, what Thomas Petterfee is talking about right now is the same reason why GME investors started DRS. Jerry Diamond, sure, it's the same reason. But I'm just telling you, you got to be ready for this low, liquidity or none at all, and the share price to come crashing down. And you just got to be willing to take it. Can you stomach it? That's the best thing about investing. It's not whether you have the brains for it. It's not whether you have the money to outlast things. It's do you have the stomach, man? Can you really take it? Can you see a stock go down 50% and not bat an eye and just keep buying more? Can you do it? Because in theory, that's what we're not supposed to do. In theory, an investor is supposed to sell when the stock price goes down. In theory, an investor is supposed to sell when a stock price goes up. And they've tried this. They tried pushing GameStop up, and they realized that as it went up, everybody bought more. They realized that when they pumped GameStop up, GameStop, the corporate team, offered up 5 million shares and profited and got into a position of power with that same net money. So it was like, pick your poison. Do you guys want it to go up? Great. GameStop's going to go ahead and offer shares and make money because somebody has to buy as it goes up. People are getting leveraged, guys. People are getting forced to buy in. They don't have the collateral to offset it. So they found out the hard way. They tested it out twice in March of 2001 and in June of 2001. And guess what they found out? We better hedge it. We better hedge it with a short. We better hedge it with AMC. We better hedge it with their private equity, assets. So do that. Do this game. Play this game out long. 3 years, 4 years, whatever it may be. But tell me why Ken Griffin doesn't retire, why any of the, who's the next one? Michael Packer. None of these guys retire, okay? They're all sitting there, and they're all worth billions of dollars, these hedge funds, and they don't retire. Take your assets under management, take your fees, and tell me why don't you ride off into the sunset? Because you have to admit defeat. You can't hand off this. You can't get out of this fund. I'm letting you know what it is. They tried it, guys. They tried to play that game, and you lose at that game. So, Jerry, if you can stomach it, you're going to make it. Look at how high the Russell was. Yeah, I saw that. Winthorpe is pretty excited. He put a rocket. This guy was crying in one of the interviews. Yes, he was. He was saying, the hedge fund's going to lose all their money. If anyone who dislikes Marantz and or GameStop community, Vinny coming in with the hammer, bro. Oh, this is classic. I still can't believe Robinhood was able to IPO. Yeah, Brownstone. They were able to IPO because they were able to go get their money out of it. It was like it honestly felt like they let them IPO as in, hey, man, we're going to pay you back for what you did for us by going PCO. So that's what I feel. Dry powder incoming. There you go, Robert. Robinhood IPO was the equivalent of getting kicked while you're down, IMO. No, it's equivalent of getting a kickback. How about that? So glad my wife is working so I can catch the live stream. Thank you, Tomas. Thank you. And there we go. Good evening, guys. Hello, brothers and sisters. Hello, Ruben. How you doing, man? Morancy, I remember when you explained it in a message. There you go. The next one is, come on, my fellow kitties. Let's all give Marantz a little cheddar to help support the channel. Meow, meow. Thank you. Thank you for the $20, bro. And that's going to go a long way. Going to go a long way to the investment fund. Hey guys, I just let you know, the investment fund's getting big. I'm just doing the best I can. Hi, Sharon. How you doing? Snacks, everybody. When protest? I don't protest. I don't care about protesting. Way too many ETFs. People buy the ETFs. The market goes up. Stocks go up. The ETFs go up. Everything goes up. Yeah, it's a whole basket. It's the whole damn market. You can do it. Synthetic CDOs. That's collateralized debt obligation, by the way. Is a federal TSP safe? Who in the board? Okay, so is the TSP safe? Yeah, the thrift savings plan that you can get into, it's no different. It's like a 401k. It's the same idea. Everything's safe to a point. I went into my 401k last night, and I have a Roth, and I have a standard 401k, and then of course I have company stock. And I went in there and I went hunting, and I said, okay, what can I buy with my funds? I've got plenty in there. What can I buy that I can get exposure to GameStop? And you can invest in a mid-cap. There's a mid-cap mutual fund. Like it's awesome, but it had a small fraction of GameStop. It wasn't even near enough like that. I didn't want to even commit my money to it. I was like, man, I'm going to stick to what I have. I have a super aggressive portfolio over there. So and I made over 20-something% this last year. And it's because I manage it myself. I don't let some guppy do it. I do it myself. They love me at T. Rowe Price. They love, oh man, I call and they're like, here's the guy. What do you want? I want that one. Okay, cool. I have like 20 different things I can invest in, and I pick and choose the right ones most of the time. Swing that hammer. And I'm not Uncle Bruce. I'm not going to charge you money and ask you to tell me your life story so I can give you financial advice. No, I don't give you financial advice. There you go. I think the best investment right now is housing and real estate. I sell weed is your name. I think you don't know what you're talking about. That's what I think. I just give you this example. Housing. Why would you go and buy a house at 7%? You're crazy. And the evaluation of the price itself. So you're going to overpay for something that eventually will get value, but inverse, you'll have to do you'll have to go ahead and Yeah, no. I don't. I'm thinking about it every different way right now, and there's just no way. There's no way. It's not going to happen. You're not going to make more on that. Not than you would if you were invested in individual securities that you believe in, that you understand, and that are undervalued right now in this market. I mean, tell me right now, you buy a house versus Nvidia, which one wins? Nvidia. You buy a house versus Costco, which one wins? Costco. Like, Costco's literally up 100%, over 100% over 2 years. Did your house go from 500,000 to $1 million? No. So it's not the same. I'm telling you how wrong you are, factually wrong you are. If that were the case, then everyone would buy a house, period. There would be no houses for sale. I'm just telling you the truth. That's not the way it works. So, yeah. It's the easiest investment because you don't have to watch it and you don't have to study. My parents' house went from 250 to 850. Yeah, but what's the timeline? What's the horizon there? Like, you're not understanding what I'm telling you. And that right there is only a 3x. I'm showing you, you could have bought Abercrombie & Fitch a year ago, and it's already up 5x your money. It went from 20 to 120. No, I know I'm right, and I know you're kidding, but the point is, you're not kidding. It's just a simple answer. It's like saying GameStop's dead, it's not a good company. That's a simple answer. Go do the homework and get the real answer. Okay, that was in the last 34 years. Look at that, 34 years to make that? No way. No way. If I put 250 in the market 34 years ago, I'm not going to have 850. I'm going to have way more. Oh my God, if I had 250 back then. Like, that's the way it works. Yeah, it's not a lot of money. That's pennies. You're pennies right now. Because they have a house in $250,000 in 1990? Wow, that's an expensive house. That should be worth millions today. Chances are it's in the wrong area. Remember all the things that you can't control. You can't control the demos. You can't control geography. You can't control the growth of your own city. These are things that you have to take into consideration when you buy a home. Walking distance, driving distance, everything. Crime, schools. Where's the real value? When you're buying stock, you better do triple the homework. Because it can be that great. If I bought Netflix when I believed in it, if I bought Meta when I believed in it, think about it. If I buy Facebook in 2013 and it's $30 a share when it IPOs, it's $488 right now. I'm getting 12 times my money, 13 times my money. There's no way. There's no way that you can tell me real estate. And I only tell you that because I literally look at stocks all day, and hedge funds and private equity firms, they're not doing foreclosures and buying up houses. No, that's too much time and energy. It is great for a home. It is great for a family. I get that. It's something you can pass down to your kids. I get that too. But guess what your kids do when you give it to them? They don't move into that house. They sell it and they take the cash and they invest the cash. That's what they do. So it's all good. I think we bought the house in 2006. Yeah. I'm with you, man. Hey, I bought a house 3 years ago. I'm not bashing you. I bought a house 3 years ago, and you guys know I paid $499. I'm straight up with you, and it's rated at like $650. Okay, so I'm up $150,000. Not to mention I've been paying into the house, right? So I'm probably up like $200,000 on principal alone. So what do? Do I go leverage the $200,000? Do I sell the house and get the $200,000 and go invest it? Nah. I give it to the kids. I don't need it. I don't work for me, man. I don't raise money for me. I don't need to eat for me. I don't put clothes for me. None of that. Pants I wear, Walmart, Wrangler. Shirt I wear, something my wife made for me and gave to me, or my brother or whoever. It's just way different for me. I'm not living for me. I'm living for my children. Swing that hammer, Darth. Yes. It's in New York, in the water, so it's definitely gone up a ton, but you're right. All we will do is sell. Yeah, I know. Most people do. Do you think GameStop buys Bed Bath & Beyond? Absolutely not, Crispy. Bed Bath & Beyond is not for sale. It doesn't exist. What would you buy? You can't buy the name. They sold it. You can't buy the IP address. They sold it. You can't buy the buildings because they don't exist. There's no inventory, so what would you be buying? There's no employees. There's no freight. There's no logistics. There's nothing there. It's completely liquidated. They put in their filings that they filed it via Chapter 11 to save money, but they actually performed a Chapter 7, a straight liquidation. which we've studied exclusively here, intensely here, through private, what I have, the Private Equity Chronicles, right? The Connect the Dots series that I made. And that tells you exactly how it happened in all facets. Hiring, the actual bankruptcy court, hiring for that as well, and just the manipulation of the markets and the people and the investment. It's unfortunate, but people didn't listen. No, GameStop is not buying Bed Bath & Beyond. How many deep? I don't know exactly what that means. How many deep? You have to ask me. Good to know. What do you think Ryan will invest GME $1 billion in? Crispy, I hope he doesn't invest it into anything. I think everything's overpriced right now with the way the market is. I think interest rates are sky high. I wouldn't invest at all. I would sit on the cash. I would sit on the cash and let the cash generate an interest for me for operational offsetting. So I think that GameStop's going to come out profitable this quarter. I think that they have $1.2 billion. They're going to increase that cash position around $200 to $300 million. I apologize. So I think that they should be around 1.4, 1.5 billion cash, and let that create interest. And I think you get about, if they do more marketable securities, they can probably get closer to $20 to $30 million worth of profit each quarter off the marketable securities. So I think that they can generate a profit off of that, in addition to slimming, the cost of doing business and the margins and the cost of selling goods. So I think that they're doing the right thing. I think the footprint's going to prove that, and they're going to be making around $200 to $400 million a year moving forward. So I think it's going to be amazing. Appreciate the knowledge. I too hope they are profitable. It's not a hope, Crispy. They're absolutely profitable. There is no hoping here. It is straight math. It is plus and minus. They are profitable right now as we speak. It's going to be announced in a month from now. They're going to be in the clear 80, 90, $100 million easy. I'm looking for 120. And Ryan Cohen, I trust. You and I both. Yes, I do trust, and I invest in Ryan Cohen as well. If he's in, I'm in, right? A debt-based system requires more debt. Just to let you know, I'm live on YouTube right now. That's the main part where I'm at, and got a lot going on YouTube, guys, if you guys ever want to come hang out. My dad passed away 2 weeks ago and left me with a block in the Bronx that's being rented out. That's cool. What should I do with it? Well, do you got a twin? No, I don't have a twin, Duke. Not at all. Let's see. What should you do with the block in the Bronx? I don't give out financial advice. That's the first thing. Second thing is this: if I had a block in the Bronx, I would definitely, at the moment, you have renters, you could rent it out because you're going to get your money out of it. It's just going to be that passive income, but the upkeep might be more trouble than it's worth. The maintenance of it, the management of it might be more trouble than it's worth. And whenever you have a property that's that valuable, the liability comes into play. You never know what could happen to you, and you could lose it anyway. So you do whatever you want. Me personally, I'm a minimalist. I'm a simple guy. I sell that shit and roll, baby. That's just me. But it used to be Smoked Fish Factory. There you go. It could be anything, man. It could be the next gas station. It wouldn't matter. It still has value. All right. Reason to keep. There we go. I read all that. Winthorpe is really here every night. Yes, he is. Yes, he needs a life, man. But for the past 3 years, we've been renting it out. That's fine. To each his own. Apparently, you do something with the money because your name is I Smoke. So there you go. I gave you your 5 minutes off the bat, like the other sad trolls, but might be actually have something intelligent to say. So what's up? No, he has nothing intelligent to say. It couldn't even go under 14. Strong consolidation. Ren, don't tempt them, Ren. It can, and it will. Fairbank Hedge Fund is just like me. I own more GameStop than Google, Apple, and Costco. Good job, man. But it was Facebook, not Google. But yes, I understand. You can rent it out. You do your best, man. My position is 1.5 since 2 years ago. So it's only gone up 1.5 times. My position officially I'll just take it from when I started the channel. When I started the channel, I've probably 3x'd my position. Yeah. At least 3x. Something like that. Costco is dope as F. Thank you, Northstar. I agree. Eli Lilly, there you go. I asked my daughter what she wanted to be when she grows up. She said private equity. Thanks, XBit. The sad part is I don't know if XBit is really a part of our crew anymore. It's hard to gauge the haters, so it's different. I like a product HD sells. Oh, well, there you go. Always like Costco over Sam's Club, over Samuel L. Jackson Club. That's funny. Curtis, how you doing? Tesla gonna have to make its mind up around 217-ish. It'll either pop up there or drop like 145-ish. Who knows? Very strong company. BCC. Yes, it is. Thank you for whichever mod got rid of that idiot. Yes, thank you. P is 11.8 and all-time highs every damn week like it was in August. Yeah, and a good dividend too. Yeah, it's a phenomenal company that you have there, Stacks. Everybody has like their little pocket, right? Their little company that they think is like awesome and they've been following it for so long and they're invested. And that's how I treat GameStop. I kept getting Tesla advertisements on your channel. And I must mean AMC is merging with Bed Bath & Beyond. F Carvana, there you go. I'm shorting more tomorrow. Oh, there you go. That's too much, man. Siri, make me a picture of Carvana headed towards Earth like a flaming comet. Yep. Who bought the semiconductor company? I don't know who did. Been holding SMCI since 2020. I'm not leaving. It's phenomenal. They tried to distract us from the real MOAS. Oh, there you go. My bad. These guys. I spent at least $600 to $700 at Kohl's and another $800 at Sephora for Christmas. Ruben, you're the criminal, Ruben. It's you. You're the one. Hey, guys. Ruben, man, I knew this mod was just turning coat on me, man. This guy shopping at Kohl's. Huh. I buy clothes from Abercrombie & Fitch. Oh, Rose. Never mind. Yep. 2 girls and a mom in the house. Kohl's and Sephora for sure. Amber, you guys are not listening to me. It's private equity. Like, don't do it. Oh, man, go ahead. What are your thoughts behind GameStop? Curious if you're bullish or bearish. Tyler Caston. I love the stock. I love the company. I love the leadership. And I would buy GameStop over any security on the market today. That's my thoughts. Love Palantir. They're entering commercial sales now. Well, we'll see how it all goes. Kohl's has been facing significant headwinds as sales have dwindled amid high inflation and activist investors push for better business strategies. Yeah, well, they're not pushing for better. They just want to buy it. Kohl's president, leaves after 1 year. Dave Alves, well, their actual CEO is Thomas Kingsbury, who's former of Bloomingdale's and Federated. So he's already from private equity. He's old as hell. He's like 77 years old or something. I don't understand it. If I wanted to get into AI, I'd probably just look into Palantir sub 20s. Well, there you go. Payday coming up. Gonna get more shares. You and me both. You guys have no idea. I have like the aligning of planets happening for me financially. Like, it's crazy what's about to happen. You might just see your boy pop out and buy 5 shares, bro. I might just go deep and buy 5 shares. I might buy 5. You guys already know, man. I'm loaded, bro. 51 shares. Warren Buffett has a secret company he's invested into, wondering if it's GameStop. Who knows? And it says, thank you. Love your conviction. What about company besides their leadership makes you love it? Tyler, I just want to tell you something, okay? And this is something that people should really study and understand. There's no such thing as besides their leadership, okay? When you invest in a company, the number one deciding factor is the leadership. The leadership will do what's right for the company and for you as a shareholder. Inherently, they'll do what's right for them because they are shareholders. When you look at leadership, I don't want you to gauge them, and I've said this so many times, and I'll keep saying it because I want it to stick. You don't want to gauge leadership based off of what they do. Okay? A lot of people have this problem. They go out there and they say, I want GameStop to give me forward guidance. I want GameStop to merge with this other company. I want GameStop to start selling these other products. I want GameStop. And it's like, I want. And then you gauge the company based off of what the leadership does. A lot of people do this. GameStop gives out zero guidance. I'm not investing. GameStop doesn't tell me their plans. I'm not investing. GameStop is just buying more shares, but they're not telling us what they're doing next. It's like, hey, you know what's really crazy? 10 years from now, you're never going to know what GameStop didn't do. Think about that. If I were to invest based off of what you don't do, That's when I know I'm winning. GameStop didn't merge when inflationary rates were so high and supply chain issues were going crazy. GameStop didn't expand when they wanted them to because they had $1.2 billion in the bank and interest rates were sky high. GameStop didn't give up on their shareholders because they kept buying more shares and they weren't selling them at the peak. GameStop didn't dilute the float. GameStop didn't. What don't you know they didn't do? That's the key. That's the power move. That's when you say, you know what? This leadership team is amazing for everything they don't do. Stop voting for what they do. That's how you invest. That's how you judge, because no one's going to tell you 20 years from now. 20 years from now, no one's going to be sitting here going like this. You know, there used to be this guy. There used to be a guy on the board named Alan Adel. And he was an investor, and he was on the board of directors, and he was one of the founding members of Chewy.com. And he came over to GameStop, and he stopped GameStop from doing this deal with BCG. No one's going to know that story. No one's going to know what happened. But you'd be amazed. You'd be amazed at the culture. You'd be amazed at the people in the job. How they talk about it and how they reference it and how they remember to do the right thing when no one's watching. And that's called integrity. And that's called business. And this is how you invest. You invest with people you understand, you trust, and you respect. Because in sales, you don't buy the product. You don't buy this new gadget, the next new this. You buy the person. You only buy products from people you like. You only follow people on YouTube that you trust, that you like. This is the only way it works. This is life. It's a people's business. I don't care what you're selling. I can sell you anything. You got to like me first. You're not going to buy it from somebody you hate. So when you invest, it's the same thing. I'm not going to buy shares from someone I hate. You'll never see these people buy into Robinhood. They hate Vladimir Tenev. They're not going to invest. Some people hate Elon Musk. Some people hate Mr. Apple. I tell you this because when you start investing and you start doing due diligence on your investments, know who's managing your money. Ooh, Coke Zero. All right. Pretty sure he just re-upped on the secret investment too. We'll find out. Warren Buffett announced, I'm going to tell you guys something. That would be amazing, right? If Warren Buffett announces that he's buying into GameStop or that he has been, oh man. The minute someone finds out whatever they're doing over there at Berkshire Hathaway, it's over, guys. It's over. I hope you know. I hope you can hang on to your nipples, man. That's all I can tell you. Fair point and well said. Well, thank you, sir. And thank you for the follow, Tyler. I really appreciate it. I'm trying to build my TikTok audience one subscriber at a time. So, Marantz getting BlackRock and Vanguard all hyped on GameStop. Have been for years, bro. Less than 10% of his net worth. Oh, man. Isn't that terrible, Winthorpe? Isn't that terrible that he only put in that much, his net worth? Like, because you don't know how much someone's liquid or not. The fact that this guy put in $10 million of liquid into a company, that's not respectable. How about a complete $50 million of liquid? That's commendable. It's too easy to say someone's a billionaire. He's hanging on to 1 million shares of Apple. Yeah, that's easy. But who's going to sell and go buy something they believe in? You put cash into something you believe in. Doesn't matter if it's 10%. Let it be 10%. You know what? I like this, Winthorpe. You know, somebody like you who's a non-believer, but yet you show up every night. You've been showing up to this channel for a whole year straight. And I'm going to tell you something, kid. 10% of cash is what moves you, right? Is what tells you Ryan what? Doesn't believe in the play? Ryan's giving up 100% of his reputation, of his time, energy, and love towards a company he's working for free. And you're worried about the 10% cash or net position that he's worth? How about the 100% of him? If he's in, I'm in. 100%. Pocket watching someone else's investments is wild to me. Wild. He doesn't have to put in $1. He's working for free. Because if you could hire a CEO, Winthorpe, if you could hire a CEO for any said retail company, e-commerce company in the world, the number one company in the world, who would be your number one pick? Who's your number one draft pick? Who's the number one guy in e-commerce in the world that you'd want to hire? It's okay. I give you two options. You only need one. I don't know what she just said. I don't know why I'm talking so fast on the live stream. No, I don't know. Maybe you're playing me at 1.5 or something. I don't know. Monica Lewinsky. I said that a while ago. Bro, you can't daydream if you're sleeping. This is so not how ESLA sings her song. Oh, is it not? I don't even know. Oh, is that? Oh, Elsa sings her song. I'm so sorry. I didn't even know what I was doing. You guys know I got to be at work at 2 a.m., right? Like, I'm literally 5 hours away from work. And I've been working 2 a.m. the whole week. Like, I get up, I'm up. Almo knows, he calls me. Wait, he's my alarm clock just in case my alarm doesn't go off. I don't know how I'm sleeping right now, and I don't know how I'm working right now. But it's new hours, and I'm doing the best I can. Gonna buy some more GME tomorrow after that speech. I don't know which one it was. What price can we expect after earnings? Usman Ahmed. I don't have a clue on price. I'm not here for price action. I'm here for all the other reasons. I'm here because I love the stock, I love the company, and I respect it. So that's what it is. Oh, I liked my own stream. I didn't know you could do that. I'll just start tapping the damn screen myself. Wendy, those food pics make me hungry. I see you post them, and I'm always on the road and never had time to find places like that. Well, that's pretty cool. Yeah, I just want $1 more than the next day. That's all I ever want. I'm easy, man. I'm not a hungry guy. Let's see what we got here. SpongeBob is mad at me. SpongeBob is very mad at me. SpongeBob, relax, bro. SpongeBob says, Marantz, brick by brick, building a pile of bullshit. Yeah, call me the third little pig, bro. Hey, come on over. Knock on the door. Who's there? It's me, the big bad wolf. Oh, man, I got a phone call I got to answer. I really got to answer this call. Hold on. Sir? Yeah. Yeah. Who's that? Who's them? No, you don't call them. You call Central Station. Yeah. No, not them. Call Central Station. Not at all. No. No. No, you call Central Station and you do the route I told you to do. Every opening. That's it. None of that other stuff matters because Central Station took over. Yeah. Yeah, no, she doesn't know. Yeah, they won't know what the hell you're talking about. It's cool. I'm live right now on the stream. You're doing good. Yeah. Yeah, just make sure you have the key to unlock them. Okay. No problem. But make sure you call Central Station first before you do it. Okay, thank you. All right. I got a new manager doing the alarm checks on the building, and I have to teach him how to do it. So, something I used to do for years, and now I don't have to do the alarm checks anymore. This is awesome for me, guys. I got a whole new role. I don't have to do it. The next guy has to do it, and he's been with us for 25 years, and he's like, hey, how do I do this? I'm like, yeah, I don't know, man. It's going to be fun. What's up, Marantz? AMC is just trash, man. Yeah. Thank you. I appreciate when I watch Marantz knowledgeable videos. Thank you so much, Nick G. We do our best. Somebody is all pumped up for earnings. Hell yeah, I am. Apprehensive slew it. I am because you guys aren't. Because a whole bunch of you wannabe meltdowners are fake fans of GameStop and fake fans of the show. And you know what I do? I just ignore you guys from now on. It's just that way for me. Axelrod, well, you're paying those bricks, bro. Thanks. Hey, I already told you I won't read Axelrod's text unless he pays a super chat. I'm not reading them, bro. When you come to LA, I'll give you the address to where I dine. Bro, why do I have to go to LA? Do you dine in LA? Give it to me and my wife. Wendy, we want to go? What the hell? People who still hold AMC were probably dropped as a baby. Yes. Super chats paid for and bought by bag holders like you. Oh, thank you, Axelrod. I appreciate you, bro. Puts on Burlington. Yeah, I don't like Burlington at all. Axelrod, a couple more, and you'll buy another brick. brick by brick. Winthrop on the wrong side of history? Yes. Yes, I got in at $4. Good job, Lou. Serious question, Marantz. Do you think Ryan's last tweet was actually mocking Reddit and GME investors, since everyone consistently speculates that he predicts everything? Pulte posted on his tweet too. Well, one thing, D-Man, I don't care about whatever Pulte did. Two, I don't care about Ryan Cohen's tweets. They don't do anything. Like they don't mean a single thing to the bottom line of GameStop. I just want people to know that. It means nothing to me. So you guys can be invested and worry about the tweets and think they have some secret meaning. It's all nonsense. What people tell you when they do all this, they're distracting you from the real news of what GameStop earnings really are and what's coming. And they're also trying to deflect on what they've been talking about for the last X amount of months, because Bed Bath & Beyond's been wrong. And yet they're still talking about Ryan being a part of their investment. And then they, PPC's tweeted the other day and he said, Ryan, when are we going to start buying up this stock? You're supposed to be buying it yourself too. It's like, who the hell are you, man? Either you support GameStop or you don't, which you obviously don't. And they all picked the wrong stock. So their show relies on that. And their show's going to fall to the bottom. They all race to the top, guys. I've seen it with everybody. I've seen it with every single YouTuber, and they never last. They fall out somewhere. They have a hardship in life that they can't handle the news. They have a hardship on the channel because they lost the content and the vibe they had. And these guys are just a little bit stronger grifters than the other ones, but yet they've had full support. They've had the full grift, $80,000 worth of super chats, a live stream show here and there, flying in jets and helicopters, and I've done it all. And it's gotten you nothing. It's gotten you right back to where you were, $0 in your investment and zero knowledge on how to invest and what the market's actually doing. So I know what it is. I know what it has been. And I mean, I've been here. I saw Ant Trades. I tell you guys, I was dealing with Ant Trades a year ago. He's a YouTuber about AMC, and he was talking about charts and how it was going to go. And I proved him wrong on the first video. And everybody's like, yo, Marantz just proved him wrong. What can he say now? Well, now he wants to do, gimmicks and acts and fights, and he says he's going to punch walls, and he's going to get me, he's going to rape my wife and kill my kids. He said all this. And I said, okay, so he's threatening me online, he's going to kill me. That's fine. His first live stream that he called out from work, and he made over $1,000 on Super Chats. And he's like, oh, I could do this every day. Well, guess what? The money ran out, his passion ran out, and of course his track record ran out because he was wrong. So you can outlive all these guys. You can outlive Boss Blunts, AMC Bigums, Matthew Kors, TMI. TMI had 700 viewers on his show today. TMI once bought viewers all the way up to 70,000 followers and whatever they were doing through AMC. They were all visiting Kansas City, the home of AMC movie theaters. All that was going on with these guys 3 years ago. And I was sitting here with no viewers, 100 views a video, no subscribers, and it was a rough run. And I'd be live for 5 hours doing TMI impressions and stuff. But the truth was the information was correct. I called it right. So you can outlive it all. That's all I can tell you. You can outlive it all because if you work hard enough and you set the ground for it. I literally have a foundation of moderators that hold me up that nobody else has. So when you go look at those other channels, they don't have a mod team like we do that actually holds me up, keeps the channel together, keeps the info going, keeps the Discord of 1,000 people intact. That's amazing. Okay. Additionally, the mod team, you also have the staunch supporters. You have Jason, you have Wendy, you have Sharon, you have Amber, you have Gabe, you have Funny Spider, you have Stacks, you have Imhotep, you have I guess XBit. I would tell you like that, but you have so many people. That's my point, right? It's just different, guys. We know everyone in this crew. We all talk. We've been around. We've been posting videos for almost 3 years now. 2,000 videos. Almost 1,000 videos on TikTok and countless Twitter accounts, and that we had to go through because they got it banned. And it's not the same. So when you try to tell me what other people are saying and doing, I just know that whole speculative side of the investment. They're not invested. If they're invested in GameStop and they believe in GameStop, we'd be having that conversation, not the other one. So there you go. Cash flow positive by end of summer. We're already cash flow positive, so there's nothing to talk about there. If you're talking about AMC, you're wrong there too. Y'all are cute. Is Marantz mentally ill? Think about it. Am I mentally ill? SpongeBob, that'd be hard to do because, I'm like outside of YouTube, like what I do outside of YouTube and the way I communicate with my peers, with my wife, with my friends and family. Here's the best part, SpongeBob. I'm going to say something that's not very popular, something that's frowned upon in a way. The reason why I'm successful and why you won't believe it is because I know somebody. Okay? I have the inside track on the positive side of life. I have the answers to everything. I have the answer to why I am successful. I have the answer to why I am diligent and why that integrity just rubs through me. I know someone. I know Jesus. And I know it's hard for you to understand this part. This is like the hardest part for anybody. Before I'm going to thank Ryan Cohen for what he does, before I thank the mod team and everybody, I'll thank Jesus myself. Because that's how positive I am about my life. There is nothing that they can do that can turn me down, get me down that way. Because I know him, and I'm not afraid to say it, boom, I've got friends. I've got opportunities. I've got things that come around me, that arise for me. I've got friends that come out and say, I support you, sir. Because we all know the same guy. Isn't that awesome? But you want to wish the worst on me. You want to say I'm mentally ill. Think about it. All right, man. Let me be this guy. Let me be the ill guy. I've been called worse. I'm a Piton guy. There you go. 51 Savage. I like that. 51 Savage. Ask that question a few more times, please. There you go. Axelrod, one more. Come and get it. Second brick. Send that money. Send the money, Axelrod. I'm waiting. Can you possibly take a deep look into Dillard's? Take a look at the 5-year chart. I have before. I understand Dillard's is at an all-time high. It's at the top of the market. There's so much more to look at on Dillard's. It's on the hit list, right? So we have to be better than Dillard's, okay? This is the problem that I have right now with Dillard's because they pay a dividend, they pay a special dividend, they pay, they do earnings, but this is the chart that you're up against, okay? I don't know the leadership team. I'm just going to tell you that right now. They have a very small float, 16 million shares. That's why the price is the way it is. The market cap itself is 6.87 billion. So when you're sitting at 6.87 billion, and we go look at the financials, and we can look at annually first, we can go into it and look at it this way. But when you look at the annual, and you scroll all the way up, you're going to look at cash and cash equivalents, and you're going to see that their cash is $600 million. They have about $800 million, right? And when you go down here to long-term debt, that's at 521. So they're a net 300 million. That's what they are. Total equity, 1.6 billion. But for a company that's sitting on the same amount of assets as most people, 3 billion on assets, and you're at an all-time high on share price, like the stock price all-time high with a small float. The only other option they have is to take the operating income they have, the 1.2 billion for the year. It's flat the previous year, but before that it was negative 100 million. Only 100 million, 200, 200, 200. So billion these last 2 years, meaning it looks great, but on scale side, it's like it's flatline. Like this is where you're at. This is the peak of it all. Does that mean it's GameStop's peak? I don't know. But from what I can see, they had a cash burn of $1 billion. Cash from financing activities, 700 million negative, and negative 235 million, right? Operationally. So now you go to quarterly. When you go to quarterly, you're going to look right here. Top line revenue has decreased every quarter, which is fine because you expect that because you know that December is going to be a big one. You're going to look at operating income and then the net income at the very bottom. When you go ahead and go to net income for these guys, 100 million, 200 million, 134 million. So 131 million. So they look decent. They look like a decent company. They look like they're running full throttle. The only unfortunate part with running it that way and running at the rate they're running, that stock price has to go infinitely higher, right? I mean, it's such a value, but yet it's not because you can't buy that stock. The manipulation of that stock is easy. I'm just telling you. The float is not there. The float is 16 million shares. So there has to be something else that I have to look at here to really see where I would get involved. But to give you an example, the high for the year is $429 a share, and the low is $257. So with the small float, you have to be able to stomach the rapid movement, right? So the up and the down of the market, and it fluctuates anywhere from $150 to $200 a share in a given year. That's really hard for some people to deal with. So it's not something that I'm looking at, not something that I see can expand unless they were to dilute their float. And so that's what they would have to do. They'd have to offer up shares. They have that ability, but we'll see where it goes. There's just so much more to it. I just don't want to look at it that way. I also have to look at the leadership team. So, and I'll do that in time for you if I ever get around to looking at the stock. Did I not show it to you right there? I'm so sorry. So all-time high right here, but the fluctuation rips are massive. So it's really tough for me to really get behind it. But yeah, I mean, you might have missed it. 2021, it was trading around $45 a share, and now it's at $400. So you missed 10x. So if you go buy that right now at 10x, but just proof, guys, that a small company, small cap company, mid cap company now, but at the time it was small cap, and they had no shares. They have 16 million shares, but yet now they're infinitely valued because of what it is. But it fluctuates. Went $21 today, and it'll take off the next day. It'll come down from that, just depending. Look at this. So all-time highs. You're going to buy it at $429? That's crazy. That's wild right there. So, yeah, no, I'll pass. I'll pass on this one. But I just don't know how high I can go beyond that. All right, back to the chat. Guys, it's getting late for me. Man, it's already 9 o'clock. I'm supposed to be asleep. I wake up in a couple hours. Live again. Awesome. Vince Zanny, I'm going to be live every day, man. Every day. But, yeah, I'm familiar with Dillard's. It's not where you want to be. All these guys are trying to go live with me on TikTok. Oh, God, terrible. Marantz and Friends on the FBI list for sure. I don't know exactly what that means, but I've never been arrested. I've never committed a crime, so I don't know exactly what that means. Man, I never catch the live streams anymore. Good to see you on, Marantz. MP, thank you so much, man. Kansas has a city in Missouri. Yes. Louisiana cities in Texas, as if. Nevada City in California. Paris, Texas. Well, there's Paris, California as well. The best thing about DRS is that there's no profit and loss counter in computer share. Well, there you go. Axelrod, there you got your second brick. Good job, buddy. Get another. Yeah, come on down, Axelrod. Come on down. I need more super chats from you, Axelrod. Robin Hood just showed more profits. Good job. Need more GME fuel for my rocket? Oh, I hear that, man. Hit the like button. GTN been looking good. Michael Anthony, you're back again. By 17, I bought the shares and a few funds this week. Like, honestly, Michael Anthony, you said the same thing yesterday. So now I'm wondering if you're just a bot, bro. Axelrod is putting 2 kids through college, just not his. DRS GME. Of course, we can watch GameStop go down. There's a reason why they don't drop it as low as they want to, though. Or else we would all have locked the float already. Yeah, well, we just keep doing it, so I'm not worried about it. I posted a graph in the stocks chat the other day. Every single trading day in February 2023, retail investor poured $1.5 billion into the market every day. Wow. I bought FLWS since February 14th. The company sold flowers and gift baskets. Okay. Cool. Well, I mean, Michael Anthony, you're really random, bro. Like, I almost thought your name was Mark Anthony. And I know Mark Anthony, he performed last night at the Acrisure Arena here in Palm Desert, California. And apparently everybody went. They said it was a great show. They said Mark Anthony's wife is so fine. I said, is she better looking than J-Lo? And they were like, yes. I said, how is that even possible, bro? This dude looks like an alien. This guy looks like a shriveled up little alien. And you're going to tell me this guy's getting the hottest girls ever, bro. And yes, I'm not racist. I'm none of that against aliens. I think aliens are hot when I see them. If they admit defeat, they can break the system. We buy high, we buy low. Of course, we can stomach it. Yeah, so that was what I was telling you, Jerry Diamond, is like, and thanks, Marantz, L Truth Hammer, sure. What I was telling you was, we do the complete opposite of what normal market mechanics do. When the stock goes down, we buy more. When the stock goes up, we buy more. They expect you to sell when the stock goes down and to sell when it goes up. And that's why they play with the stock. You know, they pump it, they dump it, they pump it, they dump it. And they do lose some people. Don't get me wrong, they lose some, but you got a guy like me. I'm not going to let that happen. Pumped, I made it, my guys. Dempsey, thank you so much. I'm watching, but I can hear you. But I can't hear you. Okay, GDJ, thank you. You're watching me on mute, bro? That's kind of scary. Are you sitting there alone? Oh my God, can you read my lips? And I just licked them for you. What happens when shorts need long shares to close and they all are DRS? Sounds like a lot of brokers will be insolvent. Possibly all of them. We'll find out. Why not? Mine started like 2 GDJ. Just exit out and come back. Well, there you go. What's up, fam? They don't know what's coming. Game share Hathaway, baby. Yes, Dempsey. Show some love and hit the like button for this man. Thank you so much, Demps. Appreciate you, man. Yep. All the amazing equity in this house goes to my kiddos. Amber, good job, man. Annoying adults who act like 5 over here, and just more and more reason to be bullish on GameStop. They registered the trademark Jamaica too. It'll probably work out fine. 99.9% sure about it. GDJ, I hear you, man. I'm down. X Crew is no doubt. There we go. Marantz the truth. We always have your back. Dempsey, I really appreciate that. You've been a member with the channel for 1 year. That is awesome, bro. I just can't believe I've been doing YouTube for so long that I have people with like 2 years, almost 3 years under their belt with the channel. That's amazing, man. And I really said it. I said it a long time ago. I'm like, I'm going to wake up every day. I'm going to show up every day, blah, blah, blah. And then I did it, and I've been doing it. And I'm like, yo, it's life. Marantz just reading the BS from those clowns. Yeah. So if you had $20 million and had to let someone manage it, would it be JPM, Fidelity, BlackRock, or a hedge fund? That dude, it would be either, none of them. Yeah, I wouldn't let any of them. I would put T. Rowe Price on there. That's why I just T. Rowe. I don't think I'd ever have 20 million liquid. Thank you, Stacks. I'm with that too. 51 is a wonderful number. Yep, 51. What's the end goal for the 20 million? I probably live off the modest income from the interest and possibly just conserve dividend funds. Yeah, I mean, you would have to. That's how I would do it. Seriously, from what I've been seeing, it would be a hedge fund for me. They'd be like, yeah, private equity. Go with the Apollo. Yeah, man, just park your money in there for like 10 years, bro. They'll get it back to you. You're like, what? No, I'm good, man. True, I guess SPY would give a great divvy. It has. Exit leader of our... Okay, got you. I'm Harley Quinn. Is that what you are? Data said, Data Zero is the worst, bro. That guy's the worst. Absolutely, Marantz. Thank you so much. Marantz, I used to think you were wrong. Oh, John, it's okay. About promoting a dividend versus a share buyback. But you are right. Dividend bypass all the shenanigans in the market so it doesn't keep going on for years. A share dividend is a way of rewarding your shareholder who in verse will go ahead and reinvest the dividend. So it's like you're doing the share buyback already. So that's exactly what I'd be doing. I've seen some news that Mr. Buffett has been getting money into things and keeping it hush-hush. It got to be GameStop. I'm down with that, dude. Shun the non-believers. There you go. All right, stop typing. Let the man go to sleep. Oh, man, Winthrop is total trash. Now, Marantz, I'll list the address on the food channel. Oh, that's cool. I love Griswold Piglet when I was young. Okay. Marantz, I'm excited for you, man. You've literally been nothing but correct and taking tons and tons of shit for it. It'll be wonderful for my guy when your green officially goes green. Thank you. We remember. Yeah, I appreciate it, Team Marantz. Hey, guys, listen, man. You know, I'm not selling anytime soon. What are your thoughts on DZ Data Zero? Can't wait to quit my 9 to 5. I think you should watch the interview I did with Data Zero. I did an interview with him almost a year ago and completely overwhelmed him with facts and knowledge because he's uneducated on the investments. So yeah, he's a kid in a candy store. He's not ready for the conversation. So yeah, if you guys watch him, you definitely lose money. Who cares, bros, about other YouTubers? Everyone knows what floats their boat. We all have the focus in self, and that's it. Simple as that. Oh, right, David. Absolutely, man. Who cares? I care. How about that? Can I care? How about this? Can I care and you not care about what I care about? I mean, I'm just asking. Team Marantz for sure. Thank you so much. Peace. Data said Marantz is a clown. It was hilarious. Yeah. Well, you got to watch the interview. I love Data, and I lurk in the shadows watching his sorry ass. I meant his back. Bro, you guys got to be kidding, bro. I will not give that dude 2 seconds of my day. You guys saw what it was when I interviewed him. Totally right, though. There you go. Marantz, everyone at my house asked me, why aren't you listening to Marantz when you don't stream after a week? Oh, Wendy, sorry, man. But yeah, tell your people that I'm alive. I'm good, and everything's awesome. Abso-freaking-lutely. A dude's name, Genius Pumping, fun. And there you go, the algorithm. Apparently, people love his hair. Definitely love the laughs at night. I love making people smile. There we go. DDE has 75% of its vote DRS. Well, that's cool. GME will never will never falter. Let's go. Correct. There we go. Y'all talking about the stock ticker. Marantz, Big Lots on a roll today. Oh, I don't know about Big Lots, bro. One of Marantz's favorites. No. I don't like, no, I ain't a Big Lots guy. I got to go check it out, but I don't know. Mark Anthony, definitely not good looking, but he can sing. His concerts are awesome. Oh, stop it. If market maker controls price, there might be someone who controls them. How will they allow GameStop to run? 110 Miller, whatever your name is, you're asking all the wrong questions. You are. Because it's not about GameStop running. It's about GameStop being the company people want to buy. Don't worry. That's coming. Marantz, yes, I don't like aliens. There we go. Amo said it best, man. Zero data is more like it. Yes, I agree to that too. Hey guys, listen, I appreciate everybody. You know I got to get going. I got to get some sleep. Before I go to sleep, I just want to say thank you to everyone. I want to tell you directly to your face, your eyes, your ears. Yes, I mean every word I say. I think GameStop's amazing. I think you're amazing. And yes, I do know a guy. I know a guy that you know, that we know, and it's all going to work out. So I love you guys. Literally, I love you. And you guys know, if you guys don't know, your friends don't know, but Rico knows. No, I've been going through some real stuff lately. Personally, what I have going on, with the job and here and the channel and everything. I'm just going to tell you, it's all worth it in the end. I know what's coming for GameStop. I know what's coming for the channel. I know what's coming for you. I know what's coming for us. So I'm just happy you guys are rolling with me to see the growth, to see the real, and to get the real information. I've been right for a long time, and I wouldn't trade in a good time for a good thing ever. I love you guys. GameStop. Can't stop, won't stop. GameStop. I'm going to see you around, millionaires. Peace.
Welcome to Marantz Rantz, no advice on finance. Spin the wheel and take a chance. Get an NFT and a little education. The system got undertow, that knowledge is flotation. You wanna learn? Well, you came to right place. You pumping AMC, might get slapped in the face. Get your due diligence, know who the villain is. Don't be a sheep when the shepherd's carnivorous. So come learn, laugh, and maybe you win big. And listen up, y'all, the wheel is not rigged. Everybody get a chance in the live chat. Kyoto spin wheel, you win just like that. Retail fight back and this retail winning. Y'all just wait, man, this is just the beginning. All fellow simians, GME group singing the truth. We just chillin', infinity pool swimming. So welcome to Marantz Rantz. A lot of knowledge but no advice on finance. Don't even need pants, you can tune in naked like Henny the Mayo Man. Internet's most hated. Don't wanna lose your money, then it's time for you to listen. If you're ignorant, invest in AMC or Superposition. The stream about ready, they told us to don't dance. I do what I want. Welcome to Marantz Rantz. 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 Welcome to Marantz Rantz.